I'm not really sure what we're gonna do today here. Why does this look so familiar? Well, I guess I already know the answer to that. Well, that's definitely what's going on in my opinion. I guess this is where we're gonna have some we'll look at Aeon. Aeon. I don't know how to say that. I did look at your other one yesterday. Did not find it to be particularly bullish, but you know, it's just my opinion. There was a setup there, it just needed to be filled out. So if you missed it, it was the very last minutes of the stream yesterday. So I'll give you the first minutes today. AEON, pharmaceuticals. Historically oversold, but had endured a split. So it's really, you know, in these kind of moments with these splits, you're really just playing the seller's game, trying to get through it. I'm gonna do something a little different. I'm gonna kind of focus on the RSI on this for a minute. Well, the last time this was this oversold was back in, let's see here, about a year ago. This was in April. And then it plunges lower and there's divergence. And weirdly, there is follow through for a while on that divergence until it finally kind of released. This is definitely one of those things where from bottom to top, I think it would have been a challenge to trade it because, and this is a 4 hour, this isn't like a short time frame because this doesn't have a, I would just say a reactive follow through. It's very delayed follow through. So that would have been like the last time you could have maybe traded. And I use RSI just as a basic indicator. There's other things we could use. Maybe like a Bollinger Band on here might help, something like that, if it's reactive to it. I don't really know off the top of my head if there's a better way to deal with. And this didn't really help very much. Nah, it doesn't even really look good either. Let's try the hourly maybe. That's even worse. The compression here at the end may have helped indicate a move, but without messing with some of the settings, it doesn't look like a very useful tool, so I'm not going to mess with it. I'm going to add the 20, and I'm going to go to the weekly real quick. Just see where that was. Yeah, I mean, this was like a semblance of, you can see right here, this was like a resemblance of something more normal. I mean, this isn't a very easy to read stock because it's just barcodes before this time, but 20 week was pretty useful here, and then reacted to it right there. So like long term, it does seem to like that reaction, and it's possible, but I think with a split, it really screws with moving averages. I wouldn't say it's artificial. It's not artificial, but you could have a situation where there's a disconnect perhaps from what's going on in that indicator to what's going on with the price action whenever you have a split. A while back, it was a while ago now, when AMC first started talking about the reverse split, and I had looked at this before, but I decided to kind of go back through it again. I went back through all the main indicators that we use, like your MACD, RSI, OBV, things like that. And I'm looking at how they calculate those numbers. And I think it's one of the great, maybe unfortunate natures of the stock market for retail is that a lot of that work is not done for, it's done for you, but which is great. But a lot of that work is also not done for you. Like there's a sense in which they're giving you whatever they give you with these indicators, and they're just using that formula. But I found that doesn't seem to be always the most valuable thing. Like on balance volume is a really tricky one. And if you go look at on balance volume, it's like it directly uses a variety of things, but it's directly impacted by something like a split. And you would think like, oh, it's not supposed to be like that. It doesn't really matter, and this and this and this, but it kind of does, because it really determines a lot of things. I think back to the split date. So I have some issues with every time we're pulling up these stocks. If you recommend a stock and I look at it and it's just had a split, I find it to be a lot less reliable. Like I don't know if I can really trust the indicators are going to be the most reliable. They're being used. So, you might say, well, sure they are. They're reliable. They're being used. Yeah, to some degree. But I think shorter time frame is better as opposed to longer. But I like to use the longer time frame, right? So I was saying like I wanted to see what this looked like on the 4 hour, maybe up to the weekly. And it's really not giving me much information. It's just a long sell down period. There's I don't want to call it a cat ear if it's not what it is, but typically when I talk about the second cat ear, and it's going to sound a little silly, maybe, this is again a cyclical thing. So it's not like this happens and then it happens again. It's like this could be a repetition of solid patterns, like almost indefinitely, because we know that within that there's that secondary structure. And then within that secondary structure, this is the idea of fractals, period, is that it's iterative. And so one of the things I've talked about with this is that you often get that foretop. And I know this is a little bit of a stretch, but on AMC, and again, I talk about AMC a lot because I used it as a learning tool for the last few years. But on AMC, I noticed that there was something like this during that big sell down that happened before COVID, but it wasn't recognizable as like a traditional cat ear. It was rather just like the number of hits. And then I went through later and I tried to see what was going on, and there was like a series of like parallels, for example, and these defined what would later become like a squeeze. But in order to sort of see that happen to fruition, you had to kind of have that accumulative bottom. So we had a 10-month accumulative bottom, and then it builds back out. And when I looked back at it later, I was able to kind of look at this, and I sort of suggested to myself, it's been a long time since I really talked about that sell-off particularly, that could have been what you see as a cat ear. And I've mentioned it before when I used to use what I called like the master fractal. But there's a section of like 4 hits almost always on the right side because it's a shrinking motion. But if you get too obsessed with that idea of 4 hits, you kind of miss what that's all about. And when I went through on the quote unquote master fractal, what I noticed was that those those hits, let's call it on the right ear here, like all these hits on the right ear, they all correlate to some kind of like a buy-in, which actually happened before the right ear. And in some cases, if it's bullish, right, it's a buy-in. And so they're selling off through those levels, and you get a sort of a symmetry there. And then there's also like a secondary symmetry within that cat ear, because again, remember, it's copying and pasting itself inside of itself, and you get this sort of symmetry motion. Why am I going all theoretical? Because that's kind of where my brain goes to right here. It reminds me of the complex head and shoulder of a sell-off, and that's being basically like bought up and then sold down. And so I don't know if in this particular situation there's any way to salvage this from a macro point of view, because normally in this particular situation, if this is what the price action had looked like, but on like a rise, so if you had ear one down here, and then you built out that kind of macro setup, I know almost too much what it looks like now. What you find later is that this is actually very bullish, because if it had jumped over, and this is like the first M, the second M, right? This is just a more nuanced version of a wave. If you had jumped over, you would have found that each of these, essentially, if I draw it right, and I probably didn't draw it right, but each of these would be a like a layup to the next, and you'd have a series of essentially just head and shoulder breakdowns, and I've called it a wind up and unwinding. And what that leads to at the end, if it holds certain levels, and usually it has to do with that preliminary support, which would be back here, because usually there's a prelim support, and then there could be some kind of a test low. And if it goes too low, it eventually could be bearish. If it goes like way down, it could eventually be bearish. If it doesn't go too low, it could stay bullish relatively. It just depends. And this is, again, pretty much like an auto reaction in a phase B top, right? And so the phase B bottom is defined here with like possible spring, but usually this goes back to like a center liquidity. And so the motion you're getting is essentially just a wave that jumps a creek and then takes off, right? And that's the basic idea here of what you want to see in a bullish price action. Now you're just talking about, hey, I'm just trading like this. I want to see if there's a pop and I'm going to get out. Penny stock trading is very different, in my opinion, than stock trading on the whole. There are some similarities. A, you buy low and you sell high, right? B, you don't hold a position longer than you need to. You usually get out as soon as you get a decent profit. But in terms of like charting, I don't find it to be as nearly as reliable. And most of the time I'm like, meh, I see something like this, and I would have assumed if there hadn't been a split here, I would have assumed this actually could be very, very, very bullish. Because I'd be like, well, technically it's boiling down and we're checking certain levels. And that may have happened, right, without me really knowing how to describe it at first. But I would say like the reaction here, at the very least, and this is what I'm about to get to here, would normally be like to this value and then at least to that value. And then if it held here, I mean, it would go at least to that value as a triangulation. And then the secondary triangulation would actually be here, which is the split between the ears. And I've talked about that before. And that would be like the secondary motion, perhaps to the upside here. And so I would look at this normally and suggest that that's a very logical way of looking at it. And really all you're really doing in the end, even though this looks really complicated, is you're basically saying, I think it's going to go back up to the top of the channel, and then I think it's going to pop and go beyond. And there should be some correlation to levels previously if it came down into an accumulation. And I find that to be very consistent in the market. So what I'd be looking at here is like, do we have something like that? And does this whole like split and the idea of it being kind of a penny stock really screw with that? And it might. So it's going to be maybe a tricky analysis. Yeah, so there was an apparent attempt to come down to this level. I mean, I can see it pretty clear as day, right? Like you can see the middle on that chart. So this is what I would expect, is that you've got like an ear one, ear two, and ear two is going to build out like a buy up and a sell down. But then I have to then look at the next levels, because unfortunately in this particular case there was no higher highs and stuff like that. So it was built out really oddly as like a sell-off. It doesn't look pretty. I'm guessing I have to kind of make it, yeah, this doesn't even look like a head, does it? It looks like it would not be a head and shoulder at all, but in theory it is. Like, this is actually kind of a head. It is the highest point that that moving average came to, and these would be like complex shoulders on downward motion. And so we'd started to be looking at this as like, where would we be expecting to go if that's the case? And I mean, I don't know. Everything here is actually pretty straightforward. This was built out long before the drop as a potential drop zone. It's just ugly as all get out, but it is there. It's just not a, it didn't have any kind of supports or anything. So I would look at that as this motion, like here, basically. And then I would be looking at probably like a split between the ears to the top motion. So I'm going to go ahead and throw it out there. This is probably pretty straightforward. I think that if there was going to be some kind of a recovery at any point in the future, it's probably going to be pretty mild and pretty low. And normally what I try to do is see if I can find a trend across. Yeah, and I'm thinking that's probably the right one, because I would be looking for the support trend here. Like, there should be a support trend that kind of cuts through it, and it's usually like roughly the same as the other one. Like, there should be a parallel, but it would essentially show you like where that wave would then come back up to. So this is very, very, very low, and I think that in a lot of ways that would be like the definitive explanation of what I would probably expect here if this continued. So does that mean it can't come back up high? No. I mean, it can have pops like crazy. We don't really know for sure what's going to happen. But the idea here would be that over the course of time, it might compress and then drop again. And that's going to give you like an approximation, because there would not be a massive upper target in this particular situation. There's no way to kind of conjure that. You'd have to just look at this as like a rebounce and maybe do like a fib retracement down. Like, oh, it's an S curve and maybe there's a 50% fib retracement. But I think that's going to give people the wrong idea that like this is somehow the most feasible thing to come back to $26. And it's really not. This is being defined by a downtrend right now. You're going to get maybe a decent reaction at some point, back to twos. If it can get back above $1, maybe you could get back to twos. Maybe you could even fill this gap. I mean, it's possible. This could end up at $5 again. I don't think that's impossible. I don't think it necessarily happens right now. I've kind of got it going right out. It really could be far, far, far in the future. This could chop down here and even make lower lows before it ever finally goes. And the reason that I'm skeptical of it is because of what happened right here. So in this particular bottom, this did not rebound quickly, and it had a lot of time just kind of scraping along and going down. And you can see that the RSI on the 4-hour had already built back out during that time period. It was ready. It looked like it was already divergent and ready to go. So, I mean, there's no historical precedence for this to even make higher highs for a long time. Like, it just doesn't exist. And frankly, the way this is being built, it almost looks like they're coming back in, oddly, to this range as a way to kind of keep it flat. I could see this potentially not moving until May, and then having the RSI is already built out, and then having a stronger reaction perhaps at that time. If I'm just going to use like other basic kind of wave analysis, like drop, reaction, I'd probably go back here and just say, well, I don't think this is going to happen, by the way, because again, every time it's gone to overbought territory, it's been smaller and smaller moves. Like, these are tiny moves. 1, 2, 3. It was like a wedge, right? And every time it goes into overbought territory, technically on the 4 hour, but it's moving like less and less and less. So I don't think this is going to be the best way to measure it. This works better when there's kind of a yin yang there between the two. But sure, like that should be about the equal distance on the drop, and it is. So this is the correct line, and that to me wasn't really the question anyways. I kind of feel like that was the correct mark, but that would be just more of an indication of like the direction away that you've moved. And again, this is essentially like a gap to fill kind of situation. Like we just eventually work our way back to this marker, but it doesn't have to be instantaneous. And I would even look at this further and just suggest that in theory, you would take it to wherever the middle is. Where did it cross down? So we're pretty close to accurate here. Like we're talking about February 2026. This could still be at like 40 cents. And then possibly earlier than that, as early as November. Well, I mean, that's kind of the way the market's been, hasn't it? And I titled my thing today, Rodeo, because I'm like, it's just crazy. I mean, if you guys are watching small caps today, it was just up, down, up, down, up, down. I mean, just right back to where you began. Massive pump in the middle of the day or middle of the morning, and then dropped all the way back down. And it set up exactly like it did previously, which is interesting, to say the least. So I don't look at this as a very lucrative option. I think if you're gonna play it, you're gonna probably just look at short term. When is it overbought? When is it oversold? But I can't see anything here to chart, and I always try to do my best. I do, but this to me looks like a mess because it was way, again, it's like way oversold back here, and it doesn't correct till like the very end, and it never comes back to where it started. And I mean, and that's just on a short term. So you're going to have to find like the sweet spot, maybe. I'm going to scroll through these time frames until you find one that's a little bit more accurate. Like this is horribly hard to read. Again, it's like, how would you know? You really can only buy in maybe when it crossed the 30, but even then it would have been like too late or just barely too late. You would have to get in like the last possible second. I don't see that right there could be a cup and handle perhaps, but that to me is not I don't think cup and handles are that small usually. Like I wouldn't call it a cup and handle. If you're talking about this right here, I wouldn't see that as a cup and handle. And the reason is pretty straightforward, because a cup and handle for a lot of people is just this simple pattern right here of like, it's essentially like one of like 5 things. So this could be a rising triangle, a rising wedge. It could be a cat ear. Like, there it is. Like people say cup and handle, and I'm not immediately like, so it's distributing, probably. I know it sounds horrible, but that's almost always what I'm thinking in the back of my head. Because most of the time when people say cup and handle, at least that I've seen, it's almost always like something like this. And I'm like, I don't think so. Like if you're talking about like a really strong stock, something like that might look bullish to me. But most of the stocks that we look at are not that strong. To me, that looks like it's very high risk for a quick distribution and then dump. So just be mindful of that. I don't think that, and look at the RSI, that's doing the cat ear thing. It's already below, pushing down. So it looks stronger on the price. So I don't know. I wouldn't know where to go with this. I think you'd have to maybe wait, see if it comes down to like 50 cents. So the move here happened already. If you're trying to just catch a squeeze or ride the wave, then set a stop, trailing stop, and 10-cent trailing stop, and then just take whatever you get. Maybe it goes up and you ride it. Maybe it goes down and you lose some money. But I just think that's not the best. Greenway Holdings. Is the chart not loading, or is it just nothing else there? I don't think there's anything there. Was this thing like born yesterday? Looks like March 25th. Yeah. Well, I mean, and that, I don't know, there's a company, this is hard to say. When you look at, we talked about NU recently, and I was just talking about, so as a comparison, just to kind of give you a quick, like, hey, let's talk about what could happen. NU is one of those that did that too. So just because it's a new, like brand new company, a lot of times you just get shorted to death. The valuation's all over the place. There's not a lot of like early adopters until the finances start rolling in. It wouldn't make a lot of sense to big institutions, I think, to buy in to something they have no idea how the market's going to respond to it. I mean, look at this. This thing got shorted to death out the gate. It was brought to the market December 2021, and maybe bad timing too, going into like COVID and junk. This seems like maybe a riskier thing, but like it goes all the way down. Starts here at $10, goes all the way down to $3, and then it takes years to recover. So the buy-in here wasn't here unless you really wanted to see like a quick money maker pop kind of thing. I would just say like this is pretty typical. So even though I'm like, yeah, I'm super bullish on this, did it have a strong start? Well, no, it was brought down low. And it makes sense for buyers and sellers, because if you're a buyer, you don't want to pay whatever they think it's worth if it's going to get shorted to death anyways. Yeah, it's the same thing though. I mean, you're talking about a distribution. They all look the same, guys. Like, distributions are really straightforward at this point. You've probably seen a million. You probably saw one yesterday at the very end of the day on IWM. It went up to the target that we picked out. It was great. But then at the last 2 minutes of the day or something ridiculous, I mean, it really was. It was like the last 15 minutes of the day. It has an up thrust at the end. It had a sign of weakness right before, but it had an up thrust right at the end. And then it takes off. So what I would look for in this particular, it takes off to the downside rather afterwards. And it really is the exact same thing that happened the day previous, which is kind of crazy. It looks exactly the same, which just tells me, again, the market's not really sure about what it wants to do. And it's just in a holding pattern. So it's just popping and dropping, popping and dropping. And it is an iterative motion, which is good and bad. Because it's really hard to know when they stop. Good because I think based on where we are in the market, it doesn't really, unless they really jack it up, I don't think like jack up a lot of these indicators, I don't think it represents a massive drop without some kind of recovery. So even though, again, it may seem like, well, have you changed your mind? I'm not changed my mind since yesterday. I still think the market's bottoming, and I think it's just a violent bottoming. I think there's an uncertainty about it that makes it seem like, well, we can go lower, and I'm like, yeah, we can. But if you look at where the lows are, there would have to be some kind of a catalyst beyond, like, the more relatively conservative lows. So we had talked about IWM a lot yesterday, and I said repeatedly, like, I think it goes up, but I also think that it could go back down to 200. And then beyond that, it could go to 160s, but 160s is not a breakdown on the big picture. It's still bullish on the, on a 10-year chart. It's going to still look like a bullish move in the end. If it were to go below those levels, that's really like a macro breakdown. So there's a lot of people that are kind of like, oh, the market's crashing, the market's crashing. I'm like, yeah, yes and no. Like, there's definitely a lot of problems right now. It's like I said, a rodeo. You're trying to stay on the horse basically as it's trying to buck you off, and that's really what I'm seeing. I'm seeing a lot of advantage taking. I think a lot of pump and dumps right now. I think there's a lot of option selling. I think that's really a big part of the game and what probably happened yesterday on IWM to some degree. They just rinsed and repeated what they did the day before, and then you basically have again, like, it's so crazy. Like, it really was like the same thing. It's like part two, but it's just really bizarre to me. And I'm thinking like probably just to kind of get people to buy in and buy calls, buy puts, so they can sell options contracts while they're just holding it. And it's good for day trading. It's bad for pretty much everything else. If you're like a quick trader, you might like it. So this is not bad because it already went down to its weakness. So I would suggest that at this point, it's probably going to react pretty soon. So this is not as bad of a call. And you guys are like, what do you mean? Well, all right. So when there's an SOW, meaning like it makes a low, okay, and you have to really pay attention to volume because this made a really high bottom, high volume low right here. Okay. And if you missed it, then you might not think that this is an SOW. You might think this is like a second, and it is, it's a second selling climax. But that's really important because a lot of times it does indicate where the market's going to go if this doesn't succeed. And IWM did that, by the way. It didn't do it on the bigger picture, but did on the smaller picture, and it played out again today. And when you see that kind of a push down, you really got to pay attention because it could be that the market is going to eventually take it back down. So this was like a test of liquidity. Hard again. You're like, well, how would I know? Well, it's just volume, you know. Volume is all there is in a lot of ways. It's the number one indicator that you have, and it is an indicator. And volume is saying a lot here, right? We're developing a bottom, but then we immediately kind of drop through it. And this is showing like who's got the strength. Bulls tried to break out first, and they failed. So you can see like, even though this doesn't look like much of a trend, there was a trend being built here. Maybe two. And there's an attempt to kind of advance a couple different times right here and right here. Probably if we zoomed in, we would find like the mini cat ear setup, you know, and it's fairly straightforward. You're going to see it in a minute on IWM because it's the same thing. Because basically it does like a little creek cross and then tries again right in the middle. And this is what happened, is it tried to advance, it failed, it does a little creek cross, right, and then it pumps, but again, it fails again. And this is where you get the more infamous upthrust, right, the UT that pumps up but doesn't close high, closes low, and then it dumps and goes the other way, again, which just happened yesterday afternoon on IWM, and it really can go pretty far. In this case, I think that it was probably destined, based on a number of things, to not go all the way down, but to really kind of enlist sellers to see where we could go, but then ultimately to get those buy-ins, take it back up, and the rest of this is kind of history. You can see that it's built upon a roughly 50-50 diagram here. Just even eyeballing it, you can kind of see that. So it's just traveling to the bottom and to the top. You can see it does test the top. You know, if we draw like from the bottom to the top here on this move, you can see that the middle is right where the inception is, essentially. And so you have another sign of weakness right here to some degree. We didn't even really test anything coming out of here, so that would have been a big red flag. Like there's no real backup test here. This is like really mild. But then the fact that it comes down lower, you see that backup test, and the fact that it comes down below and it punches through that first high that was made, it's weakness. So I'm going back through this to kind of tell the story because when we get to where we're going, it hopefully will make a little bit more sense. So then when you look backwards and you see like, okay, so this is how it was set up, and you go to where we are now, there's really not that many options. It reduces like the noise, even though at first you might think this is like adding more noise. we know that it pumps up. There's another sign of weakness right here. And I didn't mean to snap that. And then it drops. And you might think, again, that I'm adding noise, but really it's going to clarify, I think, or it does for me anyways, what might happen in the future based on where we are now. Because there's not that many different possibilities after that. So bears won. So there was a big pump and then it drops down. It looks like a massive 200% move, and it is. But ultimately, it's bringing it up again to sell off. You got really high volume tops as you're pumping it up, but we're not moving anywhere. That's a pretty sure sign that it's distributing. There's a holding pattern. People are selling a lot, or they're buying a lot, but they're also selling a lot, right? So that's not good, and it's not moving. And then we get this drop. We get the 50% level again. This is not really 50% anymore, but it is the bottom. It breaks through pretty quick, and this is where you have now some creeks to work with. So at this point, it's already reached the bottom of the SOW, and what I normally do is I would then take this and just see if this applies anywhere else. Usually it does. Like usually this is correlating to something else, and it looks like it is. If you look at where that that jump happened and then the drop, it was specifically brought to this intersection right here of both the floor that was originally picked out and then also this new parallel. So this might actually be really important. This particular one that I just dropped. This one's a little less important, but this might indicate, again, a potential creek. I'm going to make it a little bit lighter because I don't think it's as important. And then I would probably suggest that this is going to be one of the earliest signals. So we'll keep this one on there as well. I'll make it like blue or something. And then the rest of this is kind of exactly what it looks like. So there was a wave up. It created a resistance, broke it, but then came right back down through it. So I'm going to start looking at, again, this top line as probably the more definitive top, because this is really where, as you can see, there were wicks here trying to push back up, specifically that one. And that starts telling a different story. As you go back, you can see there's another gap right here across that line. And then I think before that, it doesn't even really look like there was much interaction, but right below it, there's a lot right there. So the market is pretty common sense about these things. Like if there's already an established downtrend, like we're just building out on the same downtrend. It usually doesn't just make up a new line. So the parallels end up being pretty helpful. So I would suggest that somewhere in that area is the top of the trend. So there's the wave, rejection, jump, and then again, pretty simply, I probably wouldn't use any of these markers just yet. We're going to do like a fib retracement. We'll do it from like 2 spots. We'll do it from the top here, and we'll do it from this top. Right, so you can see pretty immediately, like if you look at where the 0.5 and the 618s are, the 618s are in kind of in sync with each other in terms of the layers here. They're basically right at these particular gap points. So from a fib standpoint, it's driving the price pretty logically, which is good. That may not be a bad thing. If it's super crazy, it could be bad, but volume has dropped a lot, also probably a good thing in this case. We're missing kind of a more definitive sell, and I think this might be the highest volume that we have right here as in terms of a bottom. I like it better than this one, which again kind of makes me think this might still be in a downtrend because it didn't have a lot of stopping power. It looks really similar to what happened here. I wouldn't say it's 1-to-1, but it looks pretty similar. So how do you trade that? Well, kind of the same way you would have traded it here. You would watch and see if it has any kind of, and it looks like it's going from maybe that first high that was made. You watch and see if it has any kind of a break above this blue line. But really the trade is probably best confirmed as a, not just a break above the blue, but in this case the green. So if it breaks the blue and the green, and it probably won't do it in one fell swoop, but if it managed to do both, I think you'd be in a much better position to trade this. And I think at this point, it's going to be really different. You would expect there to be some kind of an auto reaction, like a substantial auto reaction at first. If it holds, right, and doesn't break down further, you should expect some kind of a substantial auto reaction here. And usually what I would use is before the, and this is where things get kind of tricky, you might have to use the RSI. Nope, that's not helping. That gap makes things hard. Yeah, so this is building out on the 15 minute, not quite on the 30 yet. This is a tough one. Yeah, it's really not that far because preliminary support is actually way up here. Technically that's still in the range, which is complicated. That's what I'm saying. Like I'm not really sure which one it is because that's still inside the range. It just reminds me a lot of that WTO because it had the similar build out where there was two big drops, but there wasn't a clear winner. Usually it's, again, common sense because if this is going to react backwards, I would have expected this to be about the same distance as the channel. It's a little off. That does seem right to me because normally you'd push down away about the same amount as you'd want to come back. Because you're going to have at some point, if you have an auto reaction and it's not actually bullish, that it would just be shorts from back here covering. And usually it's about the same in terms of amounts. So I'm looking at this, I'm eyeballing it, and I'm like, yeah, that's about the same value. It's pretty darn close. So I've only got like a couple different options here. This could either drop down a little bit lower to like 5.3, a little bit later, and maybe react, assuming it's going to come up to the top. I think that's a possibility. The other option is kind of more bearish, which is that this isn't actually done selling off yet. I'm curious about it as a wave because I do think it's holding pretty well, and it looks like, again, it met where it was going to go. So I'm thinking that I don't want to be too like down on it. Yeah, that looks right. There should be some kind of a wave cross here, not the parallel. Yeah, it's sort of the same deal as the other one in some ways. That does cut right through the middle. All right. Well, that was kind of one of my concerns here. So one other thing that could happen in some of these is that you get an extension above a channel and then you drive it back below. And I was like, oh, what if it's doing something like that? And this could go really, really low, like out the gate, you know, it's possible. But I was really more concerned about what was happening over here. I think this is your reactionary marker for the wave. It doesn't position itself upward, it positions itself downward. Is there an upward position here? Yeah, here. Like, ultimately this failed, so at the end of the day it's like, well, it's there, but it failed. And there's really no way this is going to come back here unless it pulls like an NU. Right? And then at that point, yeah, I think eventually it comes back here. It could be back here in the future and then higher, but it may be way off in the future, you know. And I would suggest that just keeping the top is probably wiser anyways. It looks okay to me. I think I would be waiting for, again, the break above the blue line. I think that's really important. I think I'd be waiting for it to jump back over 73 cents. So the blue line is wherever it crosses. I can't tell you exactly where it is because it may drop again. you know, it looks okay, but right now it's just kind of chopping down, so I'm not really sure. I think that would confirm a reversal of the trend here. And then I would assume at that point, let's see where it meets up. Last one. My lines get all jacked up when I go to 2 hour. I'm kind of looking back and forth, but I'm not really answering your questions because I'm really just talking it through. I don't always have answers right away. I have to kind of see the setup. First, I needed to define the trend, and I think I've got that, at least for now. The second thing I want to do is define the wave and see where that wave might break back up. I think I've got that. The only other problem might be, again, that this could come down first. And the reason I'm saying that is because it technically crossed, and I think I'm right, because I said that that number would be, I used a different measurement for this, that number would be 53 cents. That's the 50-50 down through this wave. I would not be surprised if this drops to 53 cents and does some kind of weird wedge and then breaks out and goes and tries to get above here. Like, it just would not surprise me. The way that this is measuring out would suggest that you would cross that at least 50%. Now, it can go farther, but I think that's correct, as best as I can tell. Like, I can't know what I can't know, right? So I'm only looking at what I've seen. There's an intersection here around $1.70 from that top. I think this was meant to be a 50-50 drive down to get to this channel and build it out. You'll notice that when it comes back up, if it comes back up, it doesn't have to go back above like $1.20 or something, you know. And we were looking at this, and the 618 is up here at $1.55. That's a decent retracement. If it went straight up, could it get there? Sure, if it went like this direction. But there were other retracements there that we didn't really mess with, and we didn't look at a retracement if it drops again because we didn't have a target. But if it drops again, you can see like a 382, and that it's not that significantly different, but if it drops to 53 cents, you can see that the 6/8's like slightly lower. It's really more at the top of that final candle. And this intersects the 236 is at 93 cents, way over here on March 13th. Last little bit here would be potential mirroring of double. Like, we always see this with the talk about the cat ears. We don't talk about it in reverse. But people used to say stuff like the W pattern or whatever, and that does play out oftentimes. So yeah, you can see there's a decent intersection chance if this W pattern does play out. I mean, I just made that, so that's pretty important. So without further ado, basically what this would probably look like is a rejection off of this creek here. So I do think a decent auto reaction after, like, maybe after 53 cents, if it gets there, would react. You get like a 50-50 cross around 70 and then up to about 98 cents. It doesn't go back over $1. That kind of makes sense to me. That's the 236 on the big move. It's a really weak retracement. But just to get it started, I think it probably does something like that. We may end up chopping and then trying to drive the price back up again. I'd be really curious to see what happens after that. But from that point, I think it's just about being patient. Like, I'm not really sure what this is exactly going to look like. Something like that. But you probably end up back down at 75 cents here. And this is where you're going to either, unfortunately, like this is where the make or break happens like later, because you either kind of retrace back, maybe you go all the way back up, and that's kind of more bullish, where the M crosses up, or the M doesn't cross up and it ultimately fails. And then you probably just restart and you just go down lower. Yeah, there's a lot of symmetry there, but there's also not, because if it's really not about the symmetrical nature of it at that point. Like the rotation's there. I think they pulled it back into the channel. So it would surprise me a little bit if it doesn't try. And there's other ways it could go, I guess, because you could have it. It really will depend on this area. If there's an SOW here, you'll probably know. So if this drops down lower, then there's probably a sign of weakness, and you would take these two bottoms. If it drops lower than the previous bottom here, you would take those two bottoms and drive it down and see where it goes. Same here. If it has like a lower drop on the second push after like a middle. So the wave out should be a little bit more like a consolidation, and that would just consolidate between 50s and $1. And then I think you're going to have, again, maybe a little bit of garbage here, garbledy-gook, that may mislead you into thinking it's going to go or something. If there's no sign of weakness, then, and this stays pretty strong and higher up, you might still see a spring, and that can come at the very end. The thing about ranges that's kind of confusing is a sign of weakness. Some people mistake it, and they think it's like a spring, and it's not always a spring. It may seem like it in the short term, because you might go up after you hit this. Oh, we went up. It's a spring. Well, no. A spring is like a last ditch kind of thing in a range. After all of the liquidity's been checked and tested, the spring is really like a final liquidity dive. So when we push down on a spring, it's really about the final exchange of shares and the final shakeout. And that's not what's really happening in this kind of an instance. This is like an early test of, right? And that's what happened back here, by the way. You're like, oh, it's a spring. It ran 200%. It was a massive run, right? But this is a brand new stock. And ultimately, like, this was a test of liquidity. And bulls lost. There was not enough bulls to stop it here. So shorts, think about it. If shorts had entered this play and like 5 or 6 days later, they needed to get out, it's going to take it back. I mean, you would say reasonably just covering your position back to where you started. It's going to take it back up to the 430 mark. And you can get a little bit of YOLO people in there after that. I mean, it's not a lot for a short operator to do something like that. So I don't find that to be particularly tricky. And I think it's important that we just kind of see it rightly. So like a spring could come at the end, but that's like later on, and I don't know what I don't know yet. We don't have any other information here. So the trade for me, if I were to look at this as a trade, would be if this drops down to 53 cents, I think there's a decent chance based on what I'm seeing that that's roughly where the low is. It could go maybe as low as 50. If it kept sliding down past 50, I think you're SOL. I think it's probably not a good trade. I'll even create an alert on it and come back later if it pops up, but I don't think it's a good trade if it continues to slump. So we're dropping right now, you know, that would be kind of negative. So yeah, AMC's underneath $3. That's not really anything new. We were under $3 back here at 296. So to be honest, it kind of just, again, it really just looks exactly like this. I mean, if you are paying attention, you're seeing the repetition. I think you guys are smart. I think you're paying attention. This is very clearly like a repetitive, this is like a hook value, right? We're going back up to test something, and then we try to dive low, and then we go up to distribute, and we push down. And this was a double bottom, right? And then this is like the same thing, basically. You've got a hook value right here, and then it drops low, and then you immediately go back up to the distribute. There's nothing at all particularly interesting about this. on AMC. And this is exactly what's happened on IWM. And this is what I was trying to say first thing when I jumped on. I think we had, I think we ran some people off because we weren't talking about AMC darling, the AMC darling. It's identical to what we're seeing on the small caps. There's a holding pattern taking place, and there's a market uncertainty about what's going to happen next. Now, I want to bring your attention to something here that's really, really, really significant in my opinion, okay? And I'm going to bounce back and forth because I did this yesterday, and I think it works pretty well. And GME's at 24. That also was something I talked about. I totally said that I thought this was probably going to happen. The only thing that I was concerned about here is that it went over the top. So instead of just enlisting sellers where they were and not going over, they went over the top of that trend. That'd be my only kind of yellow flag. It's not a red flag. It's like a yellow flag. It was that GME went a little too high, okay? But what's interesting about this is that if you look at this as a shrinking iterative moment, and you look at it as like we're building down, it does not necessarily mean that this is going to explode to the upside and keep going. But what normally happens is that iterations are being built out systematically to get you back up to that level later. So these are floors that are being developed and kind of nurtured into existence. And they're using liquidity to do that, right? So you're testing these levels out. So one of them is at 335. That one we already knew. And that one, I'm going to make this chart bigger now. That one we knew at 335 pretty intimately for a few days because it was like not moving, right? The next one, even though it's a little bit odd, does look like it's right at like 308. And I mentioned it yesterday that 308 is a really odd number. I don't particularly know, other than the jump on the creek back here, why we would pick 308. It is kind of beyond me. Maybe it's like 307. I don't really care what you want to say. It's basically right there, okay? 308, 307, that's the second one. So right now we've got two of these kind of layups. Like everything in the market, I can't guarantee anything. But what I can say is that typically when I see this happen, if it's heading down, it's usually quite bullish, because usually what we're seeing is that there's a press down that's happening, but we're not really like taking off to the downside just yet. Usually. There are maybe out of like, I've seen this, I don't know. Let's say I've seen it like 20 times, okay? There may have been like 3 to 5 out of those 20 times where it did something unexpected. But most of the time, it doesn't do something unexpected, because what's going on here is kind of obvious too. When you stare at the chart and you look at what's going on with these waves, and we were talking about this yesterday, we were talking about the waves on the RSI, right? We were talking about how there's an expansion and a contraction, and an expansion on the way down, a contraction on the way up, an expansion on the way down. The expansion on the way down is exactly what you'd think it would be. The idea of a widening spread on the stock market is that there's buyers and or sellers, depending on which direction it's going, right? Moving the market farther and farther every time. But notice that does not, in this case, look like what we're actually seeing. Instead, what it looks like is, and this is really weird, right? What we're actually seeing is that there's a contraction in the price and that there's a widening in the RSI. And that more often than not does signify a change of direction or a massive directional input coming. You place your bets, right? If you don't want to take any other advice from me, that's fine. That's totally okay with me, because I'm not here to give you perfect trading advice. But I will say that, again, 95% of the time, this would indicate that the market's about to make a big move. Now you might say, well, that's a no-brainer. Well, yes and no, because what started this was not iterative. What started this was, in my opinion, like an iteration that could have continued down for a long period of time, but it really relied on a push up that didn't ever happen. which is strange. So I'm going to do something a little bit weird. I'm going to look back at AMC for just a minute, and I want to talk about what I think is going on based on what I'm seeing with SPY and IWM and all that, but specifically with the small caps. All right, because we went through this before, and when we went through it before, it really looked to me like maybe it's on the other chart. Hang on, I don't want to redo it if I don't have to redo it. I'm not seeing it. Okay, whatever. When we went through this before on AMC, wasn't like I wasn't paying attention to IWM, but I hadn't like charted it in a while. And so I was kind of treating AMC by itself, right? Just kind of looking at it on its own merit. What's going on here? Not what's going on in the market at large, but what's happening with earnings, what's happening with dilution, what's happening with the chart patterns. And without going like into significant new detail on it, I'm just going to kind of tell you what I found. And what I found was actually pretty straightforward, was that starting back here where we said there was a change of character, sorry, cat's doing something he's not supposed to be doing, where we said there was a change of character, there was, because this had shrunk down into a particular mode by a particular method to build out to that second cat ear, right, as I call it. That's just the name of it that I use, right? But then it starts expanding, and ever since then, we saw a very consistent expansion on, and essentially like a widening that was going on here. It's just like a widening track, up, down, up, down, up, down, up, down. But what was more specific about it was that the method of that was the same every time. It was like a push up, and then a cat ear, a push up, and then a cat ear, a push up, and then what should have been a cat ear here. The measurement for those cat ears, I guess I'll illustrate it really quick. Push up, cat ear, push up, sign of weakness, cat ear, push up, sign of weakness, cat ear, push up, sign of weakness, cat ear. But then here's the problem, and this is where things get kind of interesting to me. And I guess you don't have to think it's a problem, but here's where things get interesting. Is the pattern had completed every time pretty much the exact same way, but this particular time, instead of doing any kind of a jump over the middle, and when looking back on it now, it's like, well, maybe it never was jumping over the middle. Maybe it was just starting to compress this way against, where these little cat ears are. That's the developing trend, and we're really just looking at this up thrust and then a return back underneath and whatever. Well, kind of. But the thing is that the retracements were the same every time, and the retracements changed. The market like tilted down, and there wasn't the same retracement. You're not going to follow all that because I'm not talking in numbers. I'm okay with that for now. So I'm just trying to do like a quick little recap. So I had seen this as like a widening, right? That was very likely after this point going to come back up to near fours because of the way that it had set up previously and where those retracements were. Did it come back to near fours? Yeah. Did it come back to where I thought it was going to come back to? No. It wasn't as high. I thought 4 to 426 would have been fine. And again, that has to do with some of the early levels, because initially, as this thing was developing, every time it did this, it created a like an early LPS kind of deal, like a support zone that it would come back to and test. We did the same thing repeatedly, but this last time we did not. Instead, for whatever reason, even though this is technically tilted like much higher, if you look at these iterative motions on a grander scale, this is what I'm trying to illustrate. Like, this is where it could have gone. It's right where it's supposed to be. They even set it up like it was supposed to be going there. Like, it's perfect. It is right where it's supposed to be. Everything looks like peachy keen. But for some reason, it just fails. And instead of even just chopping in place, we start seeing this chop down. You're starting to see this kind of like widening downward of the motion. Where have we seen this before? Well, specifically, we saw it on the walk down, really, and it's kind of confusing, but we really saw it here. And so I have a point to all this, because when you look at IWM, it actually makes it easier to see it, I suppose. Is this little arc that we see here, this patterned out, is kind of a partial reset. It's not a perfect one, but it's like a partial reset of everything else that had happened. And you would say that, like, from an iterative standpoint, I suppose, if you wanted to go this route, you would say that potentially, like, each of these iterations could start at the beginning of that spike and end after the push down. This would actually not be finished then. You would actually supposedly have like a much larger setup going like this direction, so on and so forth. This is essentially just ear 1, ear 2, ear 1, ear 2, ear 1, ear 2. You can see that expansion on the walk down. And unfortunately, and it is unfortunate, because really what this correlates to is a lot of this initial buy-in being sold back down. And what it's all about is walking back through these ranges, right? And the compressions that we saw are now working out, but they're working out to the downside, not the upside, which is kind of a stinker. So on and so forth, okay? What I noticed on IWM specifically was that there was a really clear pattern, whereas in AMC it was very muddied. It was harder for me to see it. I knew I had seen it in the expansion down, as I'm illustrating right now, and I don't think I'm wrong about that. But I think it kind of is like, oh, that's a cool academic exercise, but if it doesn't follow through, which it didn't, then what are you left with, right? Well, you're left with what's called a change of character, right? Which is that something is going a way that you didn't expect, but it's not just that you didn't expect it. And that's not really fair. You can't just say everything's a change of character. It's that you have some kind of like an actionable proof that the market isn't actually doing anything, right? That it's not following through on anything. And I think that's exactly what's happening. And I mentioned yesterday that it really just felt like weak hands. Like everything feels weak, and we already know like that a bunch of institutions took their money out. A bunch of institutions created these like secondary funds. They generated like this interest in like protecting your assets all of a sudden, like preemptively almost. Like they knew that the market was going to be garbage because they took their money out of it. Like they already knew that. And there was all kinds of news months ago, right after the big January boom, that people were like, oh, in bits and sectors of the market, they were just selling off early before all this downturn happened. Probably because, again, to some degree, Donald Trump's economic plans were kind of laid out, and everybody already sort of knew that this would cause some problems, except for, retail, who's usually kind of the last to figure out that this is going to be an issue. And that's not an indictment of retail. I'm just saying it's usually just the case. So when I look at this, what I'm seeing is what could have been, in my mind, is like this kind of cattier build out. Now I want you to notice this like pattern, and then I'm going to flip over to IWM. I'm going to show you what I'm talking about. This might be incomplete. I'm not sure, right? But there's like the cattier pattern. That's usually like the middle wave of the pattern. And unfortunately for us, it's really weak. It doesn't go up all the way. And now we're like iterating down for whatever reason. Like we're going to have some kind of massive drop. Maybe we will. I don't know. But it looks like we would just iterate down until we just sort of dump off the face of the earth. There could be some truth to that. I don't want to like scare you about it. Because in theory, a lot of times with this last cattier, if you want to call it that again, you get this kind of final drop that goes to the cross. Like this would be like a wave cross, like we jumped over it. Again, the problem here not being that happened, because it pretty much was expecting something like that to happen on the wave. Like, oh, we're probably going to compress, break out, hit the top of the wave, and then drop again. The issue is not that so much as it is like, well, we didn't go far enough. And arguably, like, we still haven't gone far enough. And this is part of the reason why when about a week ago, I was saying like, well, if we break out here, I'm really nervous that we don't go past 360 because they compressed it. They did not use the same retracements here. And then by not proving that we're going to go higher, they've left that door open by only going to 377. And I say they left the door open. I'm really just saying, like, it's a signal to the market. It should be a signal to us if we're paying attention that this could not go that way. If this had been much more bullish, I think you would have seen that this would have pushed up higher than 377. I keep going back to this little point because it's very important to me. Because if this were going to return and have another motion that goes higher, there would have been a more definite signal, and there wasn't. Instead, they left the door open as if like the market couldn't decide what it wanted to do. It double tops and then it double bottoms. This pattern right here that you see, right? This is a really interesting iterative pattern. So it is the cat ear. It is something that we've seen a bajillion times. It's kind of boring to talk about it now because it's almost like the same thing every time, right? But one thing that I want you to pay attention to just briefly is that notice that there's like a widening here and then a narrowing. And notice that if you look at this pattern from beginning to end, I'm going to do it on the little down on the RSI. I think it's easier kind of to see it. Is that if you look at this pattern from where you are in the beginning to the end, and I was just showing you on the screen, like this is the pattern down and then back up. This is the cross up, but this is like a weakness, like an SOW of sorts. It's not the strongest, right? And it ends up not really pushing very high. So this builds out more like a weakness, like you think it's going to drop down because it might. And if it does, it's probably going to go pretty low, you know. Arguably, if I had timed it out earlier, I probably would have suggested it should already be down there by like today if it were going to pop and then drop. But I also would have imagined this would have come higher and then come down. And I had done other diagrams in the past, and then we reworked them and yada, yada, yada. But notice that the specific motion here of change of direction, and this is really what everybody wants to know, right? Because like at the end of the day, like, okay, Booksy, like I get it. You see all these like patterns and stuff, but just tell me the answer. That's what this guy Nunn is trying to say. When is it going to spike? He just wants to know like what's the answer, right? Well, I'm not going to give you the answer necessarily right this second. I'm going to talk about it and then explain why I think that the answer is about to happen, but it's kind of a choose your own adventure type deal. You're going to have to determine for yourself what you think is going to happen to some degree. I'll give you as best I can what I think will happen. But at the end of the day, this is what I see when I look at these patterns. I see this kind of expansion downward. Ignore the fact that this is, you can ignore the fact that this is kind of like way off and this isn't really equal parts, okay? Because it in the end, it probably will be. But where it starts building is really over here on November 19th. And I don't know what these are, so I'm going to get rid of them. This is probably from something else. I hate doing that because I don't know. I maybe not. I may regret this. I think the waves either started on November 19th, which is after we made that double bottom, we came back up higher, or they started on November 11th. That should sound very familiar to you guys because November 11th was the day we were looking at what happened with GME. And when you look at November 11th back to like, or all the way through January, you see a trajectory on GME that's actually pointing up towards like the 32 range up to 40s. And AMC is actually pointing down. And I think that's really interesting. I'm going to leave it at that for now. But basically, I'm illustrating a point. I'm trying to get to it. I'm rambling a little bit. So let me just kind of get to the point. When you go to IWM, so look at the build out here. And if you take this backwards and you look at where this started, where we think it started, on the downward trajectory, where we think that middle is here and where we think it's finishing, honestly, it looks like Friday. And I've said this before, and you're like, well, who cares, right? This is why this is important, I suppose, is because when you then look at the second half of this, you can see that, again, this is probably the ear because it's generating, once again, on the second half, like a repetition of pattern, and this one's like up and then down, yada, yada, yada. And this is an iterative motion. So what that means to me personally, and what it means to you might be a little bit different, but what it means to me is that the motion itself, I say iterative, I mean it's actually compressing and it's continuing to compress, and that it's not quite done yet, potentially. And even though like this terminates here, and I do think it does, in order for me to like layer it up, I have to have something else, right? So short term, it looks like an iteration that's shrinking down, which would be bullish. Longer term, it really just looks like the cat ear is iterating, and normally what we see is that the second half, right, which would be all this area from basically January forward, would be a build out based on the first half, and you see the repetition of that in the middle of the second half, which is kind of confusing, right? But basically you would have it as a shrinking iterative motion going through the second half to the next, so on and so forth. All right, enough rambling about that because it doesn't really look right anyways on AMC. It looks like a mess. And it's hard to understand, like, well, what the heck does that even mean? Okay, look at the same chart now. So we're looking at November, basically, which is when the elections took place, which supposedly, you know, propelled the markets upward into this motion. Well, it's not a surprise then that we're kind of estimating this might actually be where those iterations began, all right, where the market changed character, decided to do something different. I think that the narrative being spout by the market lately has been that Donald Trump and Wall Street talked about it somewhat, the Wall Street Journal, but that Donald Trump basically erased all of the run that he had created or something. And I don't think that's actually true. I think that the market already had that in play because the market clearly, at this point, I'm like looking at it like, well, the market clearly had started it here, which is literally right after elections. There was a change of character that happened, and then it went up to the upside to distribute, which I had just attributed to a number of things on AMC, especially the dilution effort. I'm like, well, it was diluted, right? When you go back and you look at the broader market, I'm going to zoom out a little bit on this one. I'll go to 30 minute or something. I think it's important to us as a group of traders to not overlook the reality of AMC as a part of an ETF, and that it is not trading by itself in a vacuum. Like, there are a lot of people who buy and sell based on the gathering of that stock for like ETFs. And I think it's really important to keep that in mind because this kind of spits in the face of a narrative that's been going on. And I know that to some degree, the narrative persists because you're like, well, who cares? Maybe it looks the same, Booksy, but ultimately AMC's making ridiculously new lows or something like that, where these other stocks are not. Like, they're holding up. That's the word we always hear. They're holding up better. Well, they are, right? But notice now, and I'm going to see if I can find the right words for it. But notice now the correlation between what we're seeing. And again, remember we talked about that November to January 9th. Like, that setup right there, that directive motion of like November through the 9th, right, is determining like kind of like where we might go in the future. And we're thinking on GME, it might go to 40. It's actually, it seems to be set up higher. Okay. So the same kind of time period, right, being set up here, and you're seeing like it's essentially 1-to-1. Now, I don't want to be talking about things that are obvious to people, and they're like, well, I don't really care about this anyways. Like, I could look at the market by myself, Booksy. I could tell you it looks pretty similar. Yeah. but it doesn't really jive with the idea that for whatever reason, people are like, well, this was brought up and he killed it in December with an offering. And at the time, even I was thinking like, that doesn't really make sense. It went up to a particular kind of value that we had been at historically when these offerings were made. But the market is the reason it went up there. Like it didn't go up there. Like we would suggest, oh, it was earnings season, earning took it up. Yeah, but the change of character happened like right after earnings, and then it was taken to the upside. What do you mean, Booksy? You thought it was going to go up all along. I did. But if you look at it from a helicopter standpoint and you consider this as an LSPY, then you'd have to consider this as like a change of character. But that change of character only came, and most people, again, would say maybe it became because of earnings, but really, I would say it probably came because of elections. And when you look at IWM, and there's a similar kind of build out here, the market on IWM, in my opinion, was already set up a little bit more bullish. But had this dropped to the downside, I think it wouldn't have been that hard to conceive of that happening, because when I go back and I look at where these levels are now, I'm like, okay, so basically like this was just a big pump and dump schematic. And if it had gone up and just distributed immediately, which is where it was looking like it was going to go for AMC, like an LSPY, I don't think many of us would have been the wiser. We would have just looked at it as like, oh, it's just distributing. Like, so if this had popped here and come back down and then started building out down, we would be looking at this exact same way I'm looking at it on AMC, as like one of those very typical like wave tops. Like it would not look any different, you know, than what we just drew out on AMC. It would just be like a separate, you know, world. We don't, obviously this didn't happen, but it would have been like imaginary land, right? That this is where we would have gone had this just kind of distributed at that time in November and dropped back to the low. Now you might say, well, is that because of who was elected, or was that the plan all along? I don't know. But the market clearly had already established both options. And I think that it's a little bit disingenuous, perhaps, looking at it today and looking at what's been going on, to suggest that that somehow Wall Street was like unprepared for this. I think is complete baloney. I think who's unprepared is A, media, who doesn't trade stocks. They're just reacting to the negative news. B, all the millions and millions of individual investors who didn't sell off during this time period and just get their money out of the market, which is really what was happening to some degree or another. We're waiting for that bounce to happen, and this is where I've been getting frustrated, because I looked at IWM today and I thought, what the heck? It's basically the exact same. My reaction was a lot more PG-13. But I was like, basically it's the exact same thing that just happened yesterday. Like the market didn't make a decision, and it's happening again. And this is so freaking frustrating to me. You're going to be like, what, Booksy? This pattern that we're seeing, okay? Notice, like, we were just on a big picture scale. We were on like the 30-minute. We could see it on the macro. It was being pretty obvious. And it seemed to begin a while back. But notice, like, I marked off what I think is the middle. You guys are going to be like, oh, okay, I see now. I hope you see this. And I'm not going crazy. I know I'm a little crazy. I am sometimes, but I marked off what I saw as like the middle, and then this would be like the 1, 2, 3, 4 that failed, right? And then it starts generating like a new downtrend here. And when you go back and you start looking at it again, it's like, oh, like there's clearly like a shrinking model here that's going on, and it's been going on since Donald Trump got elected, since the president got elected. It's not any different than what I would normally call a shrinking iteration. I just didn't see it right away. This right here in the beginning is a sign of weakness right here. See that? This builds out and essentially it's projecting to like where you think you're going to go later, right? The market. We've talked about these before. Like where does that sign of weakness take you, like down the road? Well, it takes you to basically where we are now, potentially even down lower, because if you look at this, depending on how you want to draw it, right? If you look at it from this point of view, this is actually positioning you quite low, right? Like you're going to drop down to 197, much like what we saw here, where there's like clearly a positioning to drop you quite low. Where does this take us? $2.20 something cents? Oh, that's all right, Booksy. That's kind of where you were thinking we might go. Sure, maybe. I mean, I did talk about that number a lot. I didn't think that was the way we're going to get there, right? But if you look back at the overall creeks, this is already an established trend. Remember that macro downtrend we talked about? I'm losing people. What are you trying to get at, Booksy? I think we're about to see a big market squeeze. But like a big market squeeze. Like a huge one, potentially. Maybe before I expected it to happen. Because if it really is accelerated the way it looks like it's accelerating, there's only like two options in my mind. One is like I'm kind of wrong, and the other is I'm kind of right. And I know that sounds like the same thing. So I'm kind of right is that we've actually already done the push-up, which really smells bad to me. I hate that because I'm like, I really wanted to go to 4 or something. Okay, I wanted to see us retest 4. That's I'm kind of right, is that we've basically already done that and we're about to drop down. When we went into this model back in, and it may not be like, man, I want to put this the right way. Okay, so I think a lot of people have been very, very upset by the market action lately because the markets have been red and dying and all this stuff. I've been talking about what I think is a very probable rebound for the markets that could then potentially result in more red to the downside. But my problem in all of this has been that the expectations that I had, which was not always a good thing to do right in the market, have not always been met. And I'm also confused by the trade war and all the other crazy stuff that's going on right now in the first 90 days of the president taking office. I'm wondering if it's possible, and I don't like this because, again, the kind of right, kind of wrong mentality, if it could be possible that we are actually accelerating on our timetable. Squeeze butt. There's two options here, I suppose, is what I'm trying to say. So one is that this actually was the push-up, right? And we are seeing some evidence of that. Like I just tried to demonstrate why I think that's very possible, because technically, like, that would be your cat ear 1, that would be your cat ear 2, and we're really just missing the last cat ear. When you zoom out, it's almost easier to see it on AMC. I was pointing it out on IWM. I don't know if I did a great job of that. And you'd have to kind of be like paying constant attention to understand what I'm saying. But if you were looking at this from the point of view of a market squeeze, all right, my expectation would be one of two things here. So number one is that it's basically about to fly, which is kind of crazy and doesn't really make a huge amount of sense to me because I feel like it's too early. But there is a sense of like, oh, this is moving really fast. Like it seems to have already compressed down to wherever it needs to go. This is going to be the telltale sign right here because, and I'm just telling you in advance so you can be kind of on the lookout for this, all right? I think there's going to be a lot of people who say that this is going to squeeze for sure. But there's a danger in that in one particular area in general, right? When you look at the big picture, if this dumps down to 230 something, right? And then it starts taking off, I'm probably going to be a little bit more bullish. The issue is that right now on the small scale, we're in a holding pattern that suggests to me that the market may want to go up first. So I'm going to delete all this stuff and I'm going to show you what I mean. And you're going to be like, oh, okay, that's good enough, Booksy. I don't need any more. No, Manny, you were being a troll. I don't even remember what it was about. Tried to tell you all, man. I was right all along. That's not what you came in here about. You came in here to tell me that I was never right or something like that. Which I was right. Now that you're here and you can hear me audibly tell you that I was actually right. It did go from 3 up to near 4. And I'm pretty sure that was you that said, you're never right, blah, 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 don't listen to this guy, yada, yada, yada. Pretty sure that was you. And that it was trolling behavior. And guess what? I would suggest I was more right than I was wrong. I'd love for you to go back and find that and show me, because I bet you it doesn't show you what you think it shows you. Because I have a pretty decent memory for these kinds of things. And I'm pretty sure that, Manny, you were the one that said you're always wrong when we were down here at 3, and I said it was going to go up towards 4. And I traded it and made money, and you disappeared for a month. And now you're back when it's back down to tell me that I'm wrong. If you continue to troll, I'm going to continue to block you. Just let me do my analysis. All right, I'm going to chop some stuff up right now. So on a micro level, which is small, very short term, there's a lot of bullish divergence like all across the market everywhere. I have no doubt in my mind that there's some kind of a turn that will happen. The problems that I've been running into is that the turns have been basically anemic. Like you've been getting like a turn that doesn't quite go as far as you think it goes, and then essentially it dies before it gets started. It's called a dead cat bounce, right? Those aren't the kind of turns that I'm looking for. I'm also not looking for I wasn't looking for like I'm looking for like a high volume, high bloodbath kind of term. Like I'm not looking for like a little bounce. And I'm not really looking for like a little bounce that's just kind of got anemic volume that then has like anemic selling volume. I'm talking about like a finality kind of move, right? So is this far enough to backtest $4? Well, no. I mean, I don't think it did. But that also leaves, again, because of these double bottoms, there's a door that's been left open that I find peculiar, to say the least. And that's what I'm trying to get at right now. Because on the grand scheme of things, I'm going to widen this just a bit. We whiffed, like we didn't quite make it, and again, we're leaving some doors open that I would not have normally suggested need to be left open, because we would have normally been more definitive about direction. But I think there's been a lot of market uncertainty about directional movement. So we're kind of in this like holding pattern. This compression is going to end in a really big move one way or the other, period. I don't want to get into that too much, but I want to say that right now, looking at the big picture does give a really strong, definitive like answer, in my opinion. Hang on just a second. Goodness gracious. Cat's getting where the cat shouldn't be getting. Okay. Here's the definitive answer. All right. I think the problem that I have with this right now is that we missed like the second push-up. So what I look for in iterations is tops. And what would have been, I guess, agreeable to me as a 4-top would have been to made this advancement and then shrunk back away the other direction. So I had only really ever called for maybe 4 to 426. Those did not hit. When we were in the middle of this move, we talked about 360s, 370s as a potential stopping point that we would then back up to maybe the 340s and go again. So this was always part of like the idea was that we might come up and pull back into earnings and then go. That was always an option. It wasn't like guaranteed it was just going to run up through earnings. I knew that there was a likelihood that we could run up, pull back, and then go again. That's kind of what I was talking about when people were talking to me about like double moves. Like I remember somebody came on and said, well, don't you think it'd be a double move? And I said, well, it really is going to depend a lot on this or that, yada, yada, yada. Okay. The reason this made a lot of sense to me to some degree is because on the biggest possible scale, and we're going to have some difficulty kind of framing this right now because of the way that my charts are set up. I don't have the remember that value chart that I have? So I use that to find what I think is the real creek, quote unquote. And it did hit that creek. But I think it's a little bit nuanced here because it looks like it's in a channel above it, which is confusing as all get out because it looks like we're riding in a channel that's technically like above a creek. And you're like, oh, well, it jumped the creek here. Well, on this chart, it kind of did. Like on this chart, it kind of jumped it. But if you use the valuation chart, and I'll show you what I mean, and you go back to the build out here, there's a long-term, man, come on. There's a long-term creek here, see, that actually is met in a much better way. And that, it's hard, maybe hard to see beyond this point, but I'll try to bolden the line so you can see it a little better if you're watching. That was the creek we had talked about, and it did get met. So this is a little confusing because on the non-shift chart, it's there, but on the shifted chart where it's shifted down 226.27%, it looks like it's outside of this channel. Like it looks like it went outside the top that was made here, and it did, and that's true. And it's not like, again, I don't think it's either or. I think it's both. Like both are potentially true. But this would have made a lot of sense to me, again, going backwards to this idea that we were actually going to test for a potential breakout. If this had pulled back here and then advanced to that 426 area or $4 area, it would have been a double tap on that marker, which again falls better into line with the expectations. So it's not, this is really not that complex. It's very simple. It would have been a back test on the floor. It also would have back tested the creek. In our current reality, so to speak, that may have looked to a lot of people like a breakout, but I had expected that, and I expected that it was probably going to pop and then end up flailing and dropping back through, and that would be kind of the big shakeout move. Instead, we went into a delayed price action, and you can see the compression going on here. I mean, it's so obviously like an iterative compression. It hurts my brain. Right? But for whatever reason, we're not breaking lows and we're not breaking highs. We're just kind of sitting in this like holding pattern, and we're compressing as low as we can within this range. Curiosity, right? So I flipped. I'm not trying to go through this all over again, I promise. But I flipped to saying, well, maybe the operator doesn't really want to take it up. Maybe they're going to use like the lower push and create like a beak, which is like a downward arc. They're not going to make it go out and hit that creek again, which again, I don't know how to really draw this, but I would just say yeah, I gotta have to copy it and move it down like 226% or something perfect. But I would just say that you could probably estimate it by using just like a parallel and just making it essentially run into this previous top. And like that would have been the logical place. Again, 426 is right there. Yeah, there you go. We're at the tip of a falling wedge within a falling wedge. But here's, this is why this gets crazy really fast. So I'm so sorry, guys. All right, I'm going to be real with you, okay? I don't want you to take this the wrong way. I'm a grown man. I get it. I'm taking responsibility. But I ran out of some of my medication that I usually am on, and my brain gets really scattered and crazy, okay? So the reason I'm rambling is because of that. Sorry, I can't help it. I'm trying my best to make cohesive thoughts. I know I'm a little all over the place, maybe more than usual, all right? Not trying to make an excuse, but I can hear myself talk, and I'm like, man, I'm all over the place right now. And I know why. It's just the way that my head is when I'm like that. So that's that, all right? That makes you uncomfortable. I'm sorry. I'm just trying to be real. I wanted to tell you that really quickly because I'm going on, and I'm trying not to. But this is probably one of the most difficult iterative motions I've ever seen because it's very, very concealed in a lot of ways. It's also not in some ways, but it's not reaching the targets that you would think it's going to reach. That's why I've been like kind of stuck on it. Like, well, I don't get why it's not doing that because it should have done this, or it usually does this, and it's not. So we don't have a traditional four top, right? Which would have been like a push, 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 like a widening with then a breakdown. And you would have had this is where things got really weird when it dropped through this level right here during the earnings stuff. I was like, huh. I went to thanks, man. I went to or sir, I don't know, whatever you want to be called. I went to a bit of trouble right here because I was like, I don't really understand why we would drop that. If we're not, again, why did we hit the 377 and then we broke low? Kind of looked like, uh-oh, could go either way. Uh-oh, kind of looks bearish. And then it breaks down there. And you're like, well, crap. So are we just going down again? But we're iterating. There's no volume. Very strange holding pattern. I'm going to suggest to you that there was a change of character, and it's probably not where you think it was. I think there was one right here, which we've already talked about, in taking it up. But I think there was another change of character very recently, and I think it was right around this second earnings report. And I think that makes some sense because we have earnings weeks, and there's probably a lot of different things coming into play with our elected officials and stuff like that. And so people are changing their minds about maybe what they want to do. This, to me, again, it's going to sound a little like a cop-out because you're like, well, it didn't go up, so you're just saying it's a change of character. I don't think so, because normally I would have expected this to go up and get to that marker, but then still break down. So it's not like I was sitting here saying, I think it's going to go to the moon. And then when it doesn't, I'm like, oh, whoops, like that's not at all what I said. I think it was more about the levels that were being met. And then you see that change of direction right here, and now it's heading down. But this is where I get thrown off because I'm like, well, if that's the case, does that mean that the market wants to go ahead and take it down to the bottom? Because if that's the case, and it might be, it could be an acceleration of like massive proportion, or it could be that we really want to spend a lot more time down low. And I don't know what the right answer is, but if the idea of this being like a drop is any more confusing to you than I've already made it, what's even more baffling to me is that this is divergent like crazy on a bullish time frame. And even though this pattern is clearly already played out, we're still missing, in my opinion, we're missing a 3-4. Because if this is a shrinking iterative model, which I think it is, you still would normally have this build out like a normal cat ear. Even if it goes to the moon, it would still look like this in the end. You'd see like the iterations build out. So it's a bit of a mixed bag because I think that the reason I brought up earlier and I'm kind of jumping around a lot, but the reason I brought up earlier, I'm kind of right or I'm kind of wrong, is because there's a sense in which, this is, I guess, the hazy gray. There's a sense in which we're missing something and we're not missing something. And I'm confused by it. And we're missing kind of the upward move. We're also not really missing it. It just hasn't happened yet. It looks like it's supposed to happen, but it's not happening. It's just sitting there. And if it does happen, then that begs the question, are you going to just take off? I think there's a very real reality here that there's going to be a confirmation bias at first. People that think it's going to go are going to think it's going to go no matter what. People that think it's not going to go are not going to think it's go. But I genuinely think in this particular situation, this is going to really rest on a lot of actual confirmation. Because from this point, it might seem silly to suggest that this goes all the way back up again. But remember what happened back here. When the market was uncertain, we just came back down and we created a second bottom, and then we took off and we still made higher highs and pushed to higher highs and then eventually sold back down. Well, is that possible? Yeah. That falls more in line with what we were expecting of initially the market to do, but also what we were expecting of AMC to do potentially going into May, that we wouldn't actually get down here and we would hit like that 226 marker, which is really right on earnings, around May. And they all lived happily ever after, right? It pushes up, we get the 4s, and pushes down, we get the 2s, and then we take off to the upside in some kind of an awesome, rally going into May, June, or whatever. And that's where the real squeeze happens, and it ends up being that everybody's right and everybody's happy, so on and so forth. This would seem more reasonable to me on the whole, okay, than the other option here. But the other option here is kind of on the table because of what I'm seeing with IWM. And I was trying to get to that point earlier, and I kind of went around the big loop, and I didn't quite get there. And this doesn't mean, again, anything maybe super profound to some people, because some people are going to be like, well, I already thought the market was going to go down and yada, yada, yada. Yeah, I know. But I also thought the market might end up making a big correction after this initial pop here, but there was no pop. Like, it didn't happen. Instead, we just kind of slumped down, and we were engaging in a really high volume bottom that has a massive amount of divergence kind of built into it. When I, again, zoom out on this, I see it as a series of like layers, and I can't help but notice that this is like an M cross to the upside with a downward motion, and that it's already kind of broken below there, and that would be a liquidity test, but that it hasn't quite gotten to that retest down at 198, which is clearly where a lot of these SOW, which is sign of weaknesses, are actually kind of pointing. Like, they're pointing down towards this marker that was established as a resistance line. So cut to the quick, if I kind of ignore everything else that I've been talking about with iterations and junk, you might just look at that and say, well, it's going to come down to 198, and that's that. It's going to pop. And that's kind of like a double bottom area, or near a double bottom area. Potentially it could come way lower, because technically, if you really want to argue about going back and backing up, this could end up in a really long slump down to 160 if that's ultimately what the market wants to do. It could, but it doesn't look very possible right now, does it, with the nature of how oversold we are. And yesterday I was talking about how, like, we are so oversold. We are more oversold than we were like in the COVID drop on the 4 hour. Like, this is how low we've come down locally. And you see these little white lines down here on my, and this has not been hit since COVID. And I'm like, I don't know if that's warranted. But technically, yeah, on the big picture, could this be like a M cross up that still has to come back down for a much larger retracement? Sure. And you're starting to sort of see like the pattern emerge that I was talking about earlier, which is that this guy, it's all over the place, and it's almost obnoxiously so, right? But what's interesting is like this pattern actually doesn't seem to appear on the big picture again. What looks like instead is it just looks like an LSPY almost. If you look at the RSI, if you didn't know what was going on the big chart, you might suggest it's just like a flag. It's building back out and then it's dropping and then it's building back out, right? So on and so forth. And I could totally relate to that. I'm like, yeah, I get it. And then you would look back and say, well, we really didn't even like test any of this stuff then. This is why I think 160s becomes more relevant, because you're like, surely we're not going to go back to 160 book C. Well, maybe not that low, but this wasn't really that tested. There was a weird kind of backup to it in August. And that's kind of all she wrote, right? Then it just took off. And we called out that move up. I did not call it coming way back down. But it ultimately came down and made like a slightly lower low, which is weird, right? In order to get that check. Very strange price action on the whole. Doesn't really look very regular to me. It looks very irregular in some ways. I would suggest like maybe this is a better way to draw the line. This doesn't suggest you'd come down that low. But looking backwards, like that's kind of what we see right now on AMC. I think you're getting hopefully you're catching my drift here. The the motion itself may demand that it bounces. It does not necessarily mean that it's going to come to a new high. But that motion itself here on that jump does typically result in a eventual slump back down. And in this case, on the 4 hour, it's like, well, we already hit that, man. Why do we need to hit it again? We did that back here too. Like, remember in this drop-off period when we dropped down low and then we had this kind of fake rally to the upside? It didn't really last very long, but we tried to push back up and retest some levels, and then we ended up dropping again. And it essentially creates a massive divergence on that 4 hour. This is like that double bottom that occurs, and then this is like the middle. Well, we've had one, we haven't had the second one. Well, so what? They have to be there? No, they don't have to be. But usually, again, based on the way that AMC trades, we typically get like another test. And if you look over here, I don't think this test has happened yet. I think it's probably set to happen somewhere around April going into May, and that makes sense. Again, this is nothing particularly new if you're just like tuning in and you're like, what is he talking about? This is kind of the same thing we've talked about the whole time. So when I say the market might be about to squeeze, what I mean is that it's going to squeeze both bulls and bears, and it might do it in a really violent fashion. And I kind of hope it does, because if it doesn't, we're not going to be able to see it very easily. Well, what do you mean by this right here? Remember in 2020, a lot of people like to do that comparison to that fractal. I don't think it's a horrible comparison. I don't. I think that a lot of folks just automatically put us at the end every time, and I don't think that's correct either. But in 2020, there was a backup, and this is sort of what I've been expecting to have happen after we dropped, because we didn't really make that backup here. I changed my mind about it a long time ago. This was still within the range. I don't think this was the backup. I don't think it was. It could be, but I don't think it was. I thought we'd make that backup here to 4, and that would be synonymous to our backup here, and then we would drive the price lower. We got close enough to that gap fill that I thought we would just do it, right? Oh, we'll probably just do it. We'll get the gap fill and go, right? We might get the gap fill and go. And here's the fun part, I guess, about this. And I don't think it's that fun. I'm just messing with you guys, I guess. If you're into fractal kind of stuff, it may very well be that we think we've already experienced like this and this or something, and we were waiting for like that other push up and it didn't happen. You're like, hey, it looks a lot like you're drawing. Yeah, it may have been that's kind of where that came from in my head. I don't know. It does look right to me on the current time frame. It's not just because it looks a lot like this. But notice that the second push here, that low, where that is, and this also has the double bottom. Notice that second push here comes at a like kind of a peak between two ears. A lot of times when I look back at 2020, even my brain, sometimes I'll do this on accident. I'll look at this and think like that's the cat ear right there. I don't think that's actually the cat ear. And I think I've said this before, but I actually think it's over here. I think this push up, I used to call it like a paw, but it's like an early reaction. I don't always consider the auto reaction to be the cat ear. I actually think this is probably it, and this is like the foretop. Now you might say, well, who cares? You just told us like 2 minutes ago that this could also be the cat ear like that. And the answer is, yeah, I know. Like technically, this could just be an iterative motion, and this could be a cat ear within a cat ear within a cat ear kind of thing. And there's another one inside of here. So it's like, well, who really cares? Well, I care because for timing purposes, it matters. Because if you think 1 is 1, then you're going to think that it's already done and you don't think there's another bump coming. And it's like, well, at the end of the day, like this is basically like the same motion over and over and over again. You can see it 1, 2, 3 times in the midst of this. It's clear as mud, but it's there. It's there. This is the shrinking iteration that's happening. It's shrinking into the corner of the cat ears, not into the bottom, but into the corner of the cat ears. Okay? And then it drops one final time. Notice that low, where that is, and notice like where this comes back to when it finally like finishes with this last smallest iterations, it comes back to the bottom. And take that into consideration that this was also a gap fill, that this did drop down. It didn't go to the bottom, didn't go to like 226 as if we were in the same time frame. It actually went low, but it just fills the gap and then rallies back up to the top. What was one thing that happened here that was different? Well, we didn't fill the gap. And I did think that was kind of peculiar. Man, all right, well, we didn't fill the gap, but who really cares, you know? You guys are like, yeah, we did. No, we didn't. We missed it by like a few pennies. And that matters. It matters. Because I was like, oh, it's kind of weird. It didn't fill. It also doesn't flush low like it did in 2020. So when I look at it, I'm like, dude, I don't know, man. Like it definitely to me looks like that's the drop. That is the low right there on the 4 hour. Then it bounced out and it pushed lower. That should have been the gap fill. It looks really similar. If you're doing the whole fractal shebang, you probably look at that and say, yeah, I think that's probably where it is. And I don't disagree completely with that. I think it's possible. But there's also things about this that are like really wonky anyways, that don't really match. Like the early bottoms here don't look anything like the early bottoms that we see in 2020. Like they're there, but they're just not at all the same. There's no like triple bottom kind of motion. There's a bounce out and a build out that jumps the creek, just like there's a bounce out and a build out that jumps the creek. All of these things are a surety, right? That these did have jumps, these did have motions, but it's almost like an acceleration here to just try to get you down to where you need to get to. Whereas the other one had like more of a high build up that then drops at the very end. And that was, of course, due to COVID. Well, I say due to COVID, but you know what I mean. COVID was utilized. Anyways, point being, we're missing like some of the pieces here, but we're not missing all the pieces. And one of the pieces that I think we would be considered to be missing, it would still be that backup to this region right here. Like it's still not there. So what is going on? You tell me, Booksy. I don't know the answer. I think the answer is probably right in front of our faces. I think it's basically like we haven't made like that last push up yet. I'm not convinced it's going to go all the way back up again. Like I'm saying here, I think that's a possibility. But I also think that maybe the reason that I'm expecting that is because the way that it happened before. I disagree. Adrian. Once you pass the 200, I don't see it coming back down. I don't agree with that. It's an opinion. Here's your 200. Here's your 200 and 200. So this is the 200 and the 180 on the 4 hour. And this is from 2020. and this passed above the 200 like twice here. It actually passed above the 200 1, 2, 3 times. I don't know where we're getting this idea that the 200 is a magical number. It's not. We also passed above the 200 on the 4 hour here, 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 here. 1, 2, 3, 4, 5, 6, 7 times, 8 times after we had the big run up. 9 times if you count the push up here. 10, technically we dropped through it there and then came back up over here. So at least 10 different times we've pushed above the 200 on the 4 hour. I mean, you might be talking about the daily. I could check the daily, but at least on the 4 hour, it's not a reliable breakout indicator. Like just because you go there does not mean you're gonna break out. The same thing applies on the daily though. If you look at the 200 back in 2020, the 200 was used as a bull trap, like clearly was used as a distribution marker. This is the blue line coming down. This is 1, 2 times. This is passed over it here, here, and here again. It's the same exact place as the 4 hour. It's really no different. So I don't know the idea that we jump above it and keep going is really valid if the only time that's really ever happened is here, like once. So where does that come from? Like, just want to know, because I mean, aside from like maybe early days in the stock, this is back in 2016. There's really no other time where we've pushed off the 200 and just taken off to the moon except one time, which is right here. Every other time we've passed above it, we've distributed. So where is that coming from that we are going to definitely jump and just keep going? And then in addition to that, what I've been suggesting is that maybe we come up to 426 and then come back down again. It seems a little ridiculous right now because I'm like, well, why would you do all that? But look at where that, on the daily, look at where that 200 is right here. That's the blue line again. Maybe you can't see it. It's up here at 443 and coming back down. Halted everything though. It looks like the 200 EMA is coming to meet the current price, dropping a few cents. Yeah, I mean it is. It's coming down. This is again, I got the 180, which is slightly different. 180 EMA and the 200 SMA right here. They're right now they're sitting above us on the daily at 478 and 439. So I'm wondering like how, maybe the better question is for you is like, how does that change what I've been suggesting that we come up and check that level? Because I've been talking about coming up to like 426. It seems to me like if we jump to 426 right now, we'd be testing the creek, which I've already talked about at length, this like mystical creek thing that doesn't even look like it's there, but it's there. And that's at the same level. I don't know. It's a good question. I'm not arguing with you per se. I'm just saying like, I don't find it to be, my opinion is that it doesn't matter that much. And that once it's ready to jump, it will matter. But that right now, like if it came up and punched above and hit 460 or came up, and even if it went all the way up to like 495, I don't think that matters. I don't think it has to hold. We jumped above it here and held support on it on November 25th, and we did not take off to the moon. Yeah, I understand. So like I'm marking it off on here so you can see it better, because I know that on my screen it's hard to maybe see those numbers, but I'm going to show you. That's where the 4 hour one is right here. Neither was tested on this recent run up. Like it was, like I said, it was almost like it was supposed to be there, but it just didn't get there. Like the setup was really clean until it wasn't. And now we're just shrinking down back towards a floor and just waiting. It's really strange market behavior. But it doesn't really look to me like this is a sure thing either. Like if you look at the distance between the two, it's the 426 area that I kept calling out was a bit of a strange number, but there was reasons for that, and I had expressed that I thought that maybe 426 would be hit earlier. Right now, if it hit the creek and 426 at the same time, it would literally be Monday, which doesn't seem likely. But it would be if it hit it at the same time. But that really puts us directly between the two, the 4-hour EMAs and you can see the orange bars on my chart, and that 426 is kind of like right in the middle. But neither of that would be concrete as a breakdown. And then taking it a step further, had this, and it didn't, so I need to preface it by saying it didn't hold this, okay? But had this held and gone up and hit 426 and then chopped back through here and eventually broke down, I think that we would have seen that as a pretty succinct rejection of that same EMAs right there. Like that's what I drew on the screen a few minutes ago. It all kind of adds up really neatly and cleanly. What isn't neat and clean is this current push down. And I'm sort of suspecting right now that we're going to get like a double whammy. So here's where I'm going to maybe end this whole shebang. Do I base your charts off fractals? No. I don't. But I do think that fractals are useful in proportion to themselves in the time that they are in, if you understand what was going on with why did the fractal go up? What was it jumping? What creek was it jumping? What support was it jumping? Sure. If you do it like that, I'm all on board with it. If you just copy and paste a fractal and say we are here, I don't like that because it's very misleading. I used to do that and I don't agree with it anymore. I think it's a misleading way of looking at it, and it ultimately gets more confusion than anything else. And I'm not a big proponent of just even though it may not seem like it today, because I'm all over the place. I don't like the idea of spreading confusion. I think it's irresponsible. So I personally think that we're not. So I'm going to take my opinion now. Okay, I've already expressed my concerns with this. I've already said here's why I think my opinion might be a little bit wonky, that sort of thing. I think that when you look at the big picture, we are missing, in my opinion, another move here. I think when you look at the big picture, I don't think that move would necessarily be a squeeze. I think when you, again, step back and you look at the big picture, this really looks like a holding pattern to me. And it does not look to me like a foretop would normally look. If it is a foretop, then it's one of the weakest ones I've ever seen in my life. We'd still have to see some kind of a pump, maybe to 360, maybe to 350, something like that. I think there would have to be some kind of a fake out move here. It just has to be, because it's missing quintessential elements. The whole idea of this cat ear that shrinks and iterates down is that there's a resulting action. The resulting actions, if they're negative, have to be a cross down that breaks down. So I'm gonna kind of cap this off because I think I've been rambling, and I think that there's probably a bit of an anxiety been built up by it because I haven't done a great job of probably done a pretty crappy job today of calming anyone's fears. But I'll say this, all right, on the smallest of time frames, there's really nothing here on the small time frames, okay, that looks particularly super bearish to me. I was talking about IWM earlier, and I was just kind of talking about zooming out. You can see how ridiculously low this is. It looks like it can't possibly drop more, right? Well, that's not true. I mean, it could. We've seen RSI not be that important at different times. Certainly there could be some kind of a massive dump. But when you get to more moderate time frames, this is all pretty bullish. This is divergent bottom after divergent bottom after divergent bottom. It's been divergent ever since December. Not surprisingly, because again, right after the elections, I think there were things that were changed. And I think going into December, you were already in a position of, oddly, of breakdown, but yet the market's still starting to early react to it, right? Buyers are starting to early react to it. Volume starts picking up, especially in the final drops. And when we look at the big picture, I'm on 1 hour right now, and ever since we topped off back here in January, and this is what I was kind of trying to talk about the move from January till now, and like why I thought it was kind of a fake out move, if you will. That reactive move in January has been littered with weaknesses throughout. That point very, very low, but you can see like it's a moderate to severe widening even on this time frame, depending on how you want to posture it, I suppose. But when you get in, like zoom in a little bit closer, it's like really dramatic. And there's some motions in here that I'm like, what is going on? Like the market looks like it's about ready to explode, right? But it's just not moving. And there's a huge amount of, again, bullish divergence and build up right into this point right here. If this crosses up and over, what's probably going to happen is we're going to see the market has a really fast, like almost like a flash squeeze to the upside, and then violently reacts back down to the downside. And the best way I can describe this is to describe it as a terminal shakeout, because in Wyckoff theory, what happens is that you always go up before you go down in a spring. And so like you'll hit a spring bottom, which is like a phase B bottom, right? And you might think that the action here is just to keep plummeting if it's a spring. But that's not true. Almost all of the time, you get some kind of like a violent action up, and then you get a massive drop down. And I think this is probably what's going to happen. I thought at first that this would be a lot more moderate, right? So we may get a gap fill here on AMC. We may not. I don't think it matters that much, believe it or not. I don't think it's going to make a huge difference. I think what's more likely is that we get some kind of maybe even Monday, we just open beneath the gap or something. I don't know. It could be very quick. It doesn't really matter that much. But I would actually expect there to be a pretty big flush to the upside, potentially going into next Friday. May stop sooner than that. And then I think we're going to start seeing a really big sell-off, a major change in shares. And I'm really looking forward to seeing on, especially on AMC, what happens with the on-balance volume. Because we had talked about this maybe a month or two ago. It's been a while since we brought it up. Probably. I don't know. I don't know how long ago it was. It was a little while ago. But the OBV, before all the big run-ups, typically on the last dive, you get a pretty massive spike in on-balance volume. And you can see, man, it's happened. We were talking about it happening here, and it did happen. It came down low. I got to see where that begins. Hold on. Is it low enough? It should have come back to this level or near that level. I don't think it came low enough. So tricky, man. I think though this is what we're gonna. I think this is what we're gonna see. We're gonna see a sudden rise in the price across the market. We're gonna see everything kind of like have this quick squeeze. This is my predictive stuff, okay? And you take it with a grain of salt. But I think we're gonna see like a quick squeeze, and then I think we're gonna nosedive. I don't think it's gonna be like a day. Obviously, this is a really hard to draw out time because it's like, well, how long does that take? It may take a month, you know, I don't know. But I think we're going to see a kind of a moderate squeeze because we just don't have it. If I'm wrong, then it's going to be this kind of like pump and dump right here in place. Like we're just not going to move very far. We'll pump, but we'll only go up to like 330 and then we'll dump. I think what's more likely is we're going to see a big pump and we'll actually go up past 360, maybe hitting above 377 again, up to the 4 mark. It's run out of kind of time here, to be honest, and I don't know what else to expect other than like, well, It's out of time. So we should see that build back out and then drop. Because when you enter into, because again, it's like, it's really hard for me to do this because I feel like the same thing applies here. You can see the double M in the middle. This part's more confusing because you're like, well, the timing of it's a little weird, but it looks like that's it. So there's like a 1, 2, 3, 4 top, right? So it's basically dead. Yeah, but it's missing, like again, it's missing that back test. Because even on OBV, if I were looking at this as if this were an actual chart, and it's not quite the same. We don't want to be confusing things. Even on OBV here, I'd be looking back and saying that, well, we should be coming up to this level. Like that's what's more natural for waves in the market. Like this is typically what we see. Is that the reason that this happened, where it happened in part, is because there was a breakdown of levels. And we didn't hit any of these. At the very least, we would expect to get back to, again, in the cat ear, at the very least, we'd expect to get back to this like 40 million on 4 hour. And at the best, we would expect to maybe come up to here. And neither of those is a breakout. I'm not saying it couldn't break out, but if it broke out, it would jump above it. So like the natural course of things would be that this would push to a new high and go above it, right? Potentially, if it's breaking out, like that would be like an SOS. You see how it's like missing all of those. Like none of those are there. It's completely gone. I think the market uncertainty has basically propelled us from, for about, I don't know, maybe a week or two now. I would say it probably started here, maybe at the end of February. There was a decision that was made. But I would say this whole thing down here has just been one kind of delay tactic to just sort of keep the price neutral and not really go anywhere. You're still within range. You haven't really made new lows. You could make a new low, but you haven't. You could have made a new high, but you didn't, you know. I think a lot of this probably even stems back farther to about February 14th. And ultimately, like we're in kind of a pivot mode. Like we're missing everything that would normally define this kind of a price movement. So if on OBV, like I saw this spike up and then reject and it hit, let's say it only hit 344, and then you start seeing that rejection taking place and the price is just chopping, well, maybe there's in theory a rejection that's taking place right there on that 4 hour, and it ultimately needs to be respected. This would make sense to some degree if you look at this as the 4 top and you're like, well, maybe it's awkward as all get out, but I could still see this being like a wave up, down. Sure. And that's kind of what I'm getting at here. I made it a little bit more dramatic there, but that's kind of what I'm getting at. It's like, it just doesn't have that push. In the event that it goes higher, you might be asking the question, well, what situation here actually takes us to the moon? Because you said there could be like a quicker squeeze. I'll tell you what that situation is, and then you guys can make up your own minds about it, I guess. But that situation is basically that this iteration is over, and that instead of, it was kind of what I said in the beginning, that basically instead of doing this kind of motion up and then back down again, and I have this going down really fast, but it would be slower in this concept, that instead of going back down again, you basically drop straight down. So there could be like a pop, but it'd be like an insta reversal, and then you'd basically like dump all the way to the floor. I think there is a very real possibility if that happens, then this is kind of over. And I don't necessarily think it even stops there. I think what that would mean is that we've now adapted to the new highs as, and I'm going to change this, and you'll see what I mean when I change it. We've, instead of using those markers, we're actually using, if I can get it right, I'm not going to get it right. I'll just do it manually. It'd probably be faster anyways. So I know what I want to do, but it's not working out. that we're actually building out this way. And we're not really intending to go up higher, but we're going to come back down. And we'll probably meet that $2 level earlier. This is a situation that I could definitely see us having an actual like terminal squeeze type moment in the market, which is a bit strange because I think that this is where maybe Stockfather and I are going to disagree, and I don't know who's going to be right, because this is right around GME earnings. And the only reason I say that is because I think he had called out like a really low low. So he might suggest that, yeah, that happens, but if we do pump, it's just going to be like an LSPY, and then we're going to dump again and do it all over again. And he might be right, and that could be a bad situation. But I do wonder, based on what we're seeing on the broader market, if something happens, I don't know what it would be, here that generates like an actual squeeze moment. And when I went to the effort earlier to try to talk about, there was a copy paste that was going on in and it's really annoying, but it's like a copy paste model that's going on with IWM, and it's built upon these layups here of, again, that same kind of distributive motion, like pumping and then building an SOW and then pumping up again and then distributing to that SOW target, so on and so forth. And this has happened a number of times, but it started actually much larger. It started like quite large back here. And you can see like the iterations began, it's crazy to look at this now because the iterations began, like this would be like this is like a part of a part, right? This is like the first big wave back up. This was the second ear. We were talking about the 1, 2, 3, 4. But if you look at the second half of that second ear, which would be like an iterative version of the bigger picture, that's where the first weakness is. It's right there. And it goes right to it. It's like right on the money. It heads right back down to that weakness after the pump. And that's like the second iteration. The first would be like the biggest, right? We're not getting there yet. But the first would be like the biggest iteration, which is like the big macro cat ear that started in November, arguably. And that builds out with this bottom, right here. And then the second actually builds out here off the second cat ear. There's a lot. And then the third is right here, also driving the price lower right there. And I went to the to this kind of like micro level, and I was looking at what was going on. I was like, this is a mess, because it really, to me, it looks like the market doesn't really know what it wants to do, which is bizarre, right? And so we're creating basically the same thing over and over and over and over and over again. And even though this looks kind of ugly, it really is the same. Like this is another like layup here that's occurring, like on a slightly smaller scale, but it's still there. Like, because it's the same motion. If you're paying attention to what we're talking about with iterative motion, then you understand that like what the cat ear is in some ways is a rejection of bullish mandate, bullish direction. Like we're going to go this way. And the cat ear is ultimately like a breakdown. It's a distributive motion that's saying, no, there's weakness here. We're going to come up, reject off that level. We're seeing kind of the same exact thing play out right now, but on a slightly weird, lopsided scale. It's doing really bizarre stuff, right? And we're missing like pieces of it and yada, yada, yada. But I noticed it yesterday when we were in that inverted head and shoulder towards the end of the day, because I was like, oh, that's the exact same motion right here that I'm talking about on the big scale. And I'm like, crap. Because I had talked about it during the stream and said that I thought this was a potential SOW. And I'm like, oh, it's still like doing its thing. It's not as bad as it was for certain reasons because of the nature of where we went before this motion happened, but it's like, it's still there, right? And then you can see on the bigger picture, like even if it did build out to another pop, there's a potential here for a very, very strong negative reaction to occur, right? If this thing pops to the upside suddenly, that you could have a really strong negative reaction that sends you again into like a tailspin down, even though this is clearly like got a lot of bullish divergence in it, which we were mentioning there is on some time frames. It's like it's also very much like in a shrinking mode. So yeah, AMC and GME broke to all-time highs like 4 or 5 months before the other ones got there, because when they got there and they reversed, AMC had already broken down from its top range. It was the November of 2022 area. The problem is that it actually left later though. So while AMC did make all-time highs and GME did make all-time highs, it's almost like compressed. And again, it's like we call it like a slingshot on the channel because it tends to be a pretty accurate way of looking at it. Basically, if you have a wave here and you were saying like, well, this is what happened with the market, maybe to some degree, you would suggest that what AMC did is it basically did like a hyperbolic version of a similar action. So while the market was trying to kind of go back up, and it did, AMC and GME basically were delayed, but then they shot past. So it's like an offset, essentially like this, kind of. And that's not proportional, but that is what happened. So, I mean, the market really wasn't even like that. It was really more mild-mannered. And AMC and GME were kind of doing crazy things, but especially AMC. It was very much like late to the party. When the market went into SOS and started walking up, AMC was actually in a downward motion. So as soon as the market broke out, so it's not quite true to say it was a front runner, because it really wasn't. The market had broken out from its previous all-time high already. Like it had already jumped over. This isn't even a great way to do it. It's more like this. The market had already kind of like jumped over and started advancing to the upside, and AMC went the opposite direction. I don't know how to describe that. In 2021. So the way I've kind of looked at it is like if I had waves within waves, and I kind of need to redraw it because I drew it wrong. But let's say like this was the 2000, and this isn't quite what happened, but let's say this was the COVID drop into the peak. Well, yeah, like this is kind of the way that it went, but like when the market hit its all-time, I'm going to use this green line. When the market started breaking out, notably, it was right at that moment that AMC went the opposite way and went to a new low, went in spring. That's the liquidity grab, right? It's not quite right to say that it, and we wouldn't necessarily look at it this way, but it's not quite right to suggest that it was inverted, although people would say stuff like that. It's really more about this. Like it's a wave within a wave kind of thing. So like the way that the market reacted, it was like this. So by the time the market hit the highs in November of 2021, that time period, AMC was doing like this business. So it's really like a whip around of the market. It's almost like it went away for it and then it squeezed and went back up. Now I know it's not that simple because there's obviously something that happened in the middle, but that is very close to what it actually looked like, because the market's more steady in that regard. And mostly I was looking at that a long time ago at the S&P 500. I didn't really look at small caps at that time, but that's the basic idea here. Right. So yes, it's true that there was an early like reaction with AMC that looked kind of similar, but at the end of the day, like that was not the end. In the end, it was a squeeze based on, to some degree, based on like a slingshot. It got there early, and it also was crapping out early. But technically, the market broke out first. And we like pushed away for another month or so, I think, before we finally took off. When I look at it, to me, it looks like more like that, like a gravitational thing. Yeah, it is. But at the same time, the market's in a down phase still. Like it's in a retracement phase. It hasn't broken out yet. So my thought is that the market's kind of doing this business. And this is why I think what I think to some degree. I know this isn't quite the same because I know that COVID is a very unique time. And obviously, we didn't really have a lot of huge backups once COVID happened. We kind of just took off and we had some backups, but it wasn't like deep retracements. But what we're trying to do is essentially the same thing. We're trying to find like a support. If you want to look at it like that way, it's probably easier to understand it that way anyways. You know? So I would suggest that, let's just say, I'll make it like blue or something. This blue line is like your S&P 500 slash, and I know that you guys are like, well, yeah, but AMC's not doing this. They kind of did. Think back to May, and then we hit peaks, right? We really peaked early and then went flat for a long time. So it's a little different because it's for AMC, it's like this, right? It's like really crappy looking. Because we went up all at once, you know. Surprise, surprise. Maybe something more like this. And so there's a really bizarre little compression happening. I'm thinking that at this point, this is probably a pretty decent analogy, and that's why it looks a lot like the way it looks on the fractal stuff when you compare it. But we haven't made this push back up. We're like in the middle. We're like right here. This is what's bothering me right now. I don't see it. And maybe I'm missing it. Maybe we did hit it. This is the cat ear right here. The paw with the cat ears. And it's the same thing. But we didn't make that push down. So I don't see us making this hit yet. And that's what I'm trying to suggest, that maybe we need to make that hit. And then we need to have a real serious sell-off. Like, I know it seems like we've already had that, but we haven't even pushed down to lows yet. And I think that needs to come, and that might come as the market does rally, you know? And that's what I'm wondering is if the market goes ahead and gets its correction out of the way, maybe AMC dips a little more and gets to the gap or something. Maybe the market hits, I don't know, 198. It's only $6 away. It's not that far. It could go ahead and have like a flash moment and then a drop. If the market goes ahead and does its correction here at this point and it hits whatever low it's going to hit down bottom, it would not surprise me if we see this kind of counterintuitive motion with AMC, like the motion of I'm going to push away and go for the spring. And that's actually what I expect. I was most shocked by the fact that we didn't do a secondary push-up. It wasn't the idea of coming down low. That's always been on the table. But yeah, I genuinely think like this is probably what we're experiencing, that we essentially had like an early correction with AMC. This is very similar to what happened in 2020 to some degree, but almost like on a micro level, 2022, I should say. And then IWM keeps going up. It makes its all-time high later on because we know it didn't stop in May. It just kept going, right? So AMC has this little blip, kind of gets it out of the way. It's like one move. The rest of the time, it's just kind of chopping and struggling. During this time period, this is where like the market's bullish. And this is where AMC is doing all that ridiculous like blah, 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 blah stuff. Like, you know, we were going sideways like crazy people and doing these like big volume bursts that were going nowhere. And it's like, well, I mean, that's kind of what happened, you know. when you look back at COVID is like there was a build out that was happening in the market at large that just wasn't quite the same on AMC. It was building out like a rounding top. And I was, again, most concerned because we didn't make this push up here. That didn't happen. And I was expecting there to be a push up before the drive back down. And instead, we slump and it comes way later in like a slumping motion, which again kind of begs the question, we shouldn't necessarily expect it to be exactly like 2020 because it's not the same time. And there could be some major differences. Like this could end up being a really high spike, you know, that does come up to like 5 or something crazy and then dumps all the way down. And that would throw people off like so much to break some of these levels and then to come back down. But it's totally feasible if you look at the way this has traveled. We may, and then again, we may not come up that high. Like maybe this 377 was it. That's where I'm like throwing my hands up. Like I don't really know for sure. It seems like there's a move missing. I think based on all the indicators that I'm seeing, there's a compression happening here. It looks like there should be some upside, but I don't feel like it's the right time. Other people are going to look at this and say, dude, it is an LPS. It's going to hit here and then just take off. And to that end, I'm going to be like, yep, it's totally possible. We're all talking about going down, but we didn't talk about the LPS. LPS is not out of the question. I think there's a trickiness to this, like which I don't think we've made the moves that we need to make yet. And that's why I'm trying to argue, like, I don't necessarily think we're going to get the LPS because I don't necessarily think we've actually made the down move yet. I think we're missing this move right here that should retrace us back to the beginning on balance volume. It's going to go really low. I think it's going to go all the way back down to like this value here that we started at. That's actually fairly 1-to-1. Doesn't look anything like it, or doesn't look exactly like it, I should say, on the chart, but it's almost 1-to-1 with what we did actually have happen in, if you go back and look, there was a huge dive on balance volume at the very end after it rose to all-time highs. Like at that point, this wasn't the peak right here in that first push up after COVID. It was really at the end. It peaked when it went to, I can just go back, but it's going to be all flat and weird looking if I do that because I have to rescale it. But basically, it didn't peak until that final push in November where it rallied and then dumped. And I think, again, like we're kind of missing that. We have a rally here, and I've thought to myself, well, that could be it. This dump doesn't look very convincing, and it's missing that last kind of ear point. A lot of this is going to come down to opinion. And then I've mentioned the LPS, and I should elaborate if you forgot about that. So a lot of times when we do this motion, if there's an LPS, which does not happen every time, you get a cat ear section over here, which is possible. It's possible it's done. I think it's a slumping cat ear. I think it's kind of falling down. I don't think this is it, but you could argue that that was actually the foretop and this is the last drop. You could argue that. I think it's a valid argument if you want to argue it. But you would expect this to maybe drop at the end. But the thing that often signifies this move and that makes it kind of unique is that it should come back and hit this creek. And usually the setup is such that it's fairly obvious if it's going to make an LPS or a spring. Because if the setup is pretty benign, and this again is a little subjective because you'd have to like kind of see it and draw it out every time and decide whether you think it's going to go down or not. It usually doesn't leave a lot of room for questions though. Like if the creek is really, really, really steep, and ours is very steep, it just is, it's really steep, then typically most of the time it's because all of this is really just an effort to build up a distribution to drive you down. And I'm a bit of a broken record here when I talk about this stuff, and I know that I am, but I need to kind of repeat it constantly because I don't like being misquoted. And there's oftentimes people that'll come on for like a minute and then leave, and then later they're like, "What happened?" I've never said that I've got to repeat myself like a billion times, but I've never said that I didn't think we would be coming down. I thought we would come down. I just thought that we would have another upthrust to get more liquidity to drive the price down. I did not imagine us slumping and having a really weak kind of secondary upthrust here to initiate the sell-off. So for whatever reason, they had done enough of it here in the beginning maybe. And that might have been the key, is like there was a lot of heavy volume early on. Maybe that's the reason why there was no need to go up later. That's possible. I don't know. It's just theory anyways at that point. It's just speculation. But I always thought we would kind of like build out, do some distributive action here, and then drive the price down. There were only a couple different possibilities, and then we kind of explored those on and off of like, well, there are some situations where this crosses up and it could trade high and go up higher. Like those were one-off, like here's something I found kind of things that could be possibilities. The main narrative here has always been kind of the same, which is you're going to hit 250s at some point. You're going to have some kind of a low in the threes as well. There would be some kind of a push to 14 and possibly a dive back down to near 1. Like it's going to push low. Those are things that I said like years ago, and I kind of feel like it's the same every time. So when I look at this model, I think about this every single time because I'm like, well, is it doing what I expected it to do? Yeah. The reason that I have to keep going back to this idea of LPS is because an LPS is a last point of support that just doesn't make a new low. It's the trickiest one because unless it's really obvious, and I don't think ours is really positioned itself in a way that makes it seem very likely. But unless it's really obvious, this is kind of a crapshoot. It's really hard to know how to predict something like this. And you can see why, because even if it were to bounce here and go back up, and this is sort of what happened in 2020, even if it were to bounce and go back up, in order to kind of like confirm that an LPS has actually happened, you have to just start making higher highs. Like you have to start breaking out of some of those original levels. And it's never, like we would, in our particular case, you probably have to break out and hold above at first 430s and then 550s, and it's just a lot. I mean, that's a lot to wait for confirmation, but that's what you'd have to do because there's no other way to confirm it. Because even if this pushes up, and you can see what I mean, like that could easily just be a back test on a range, you know, that still then drives the price back down. And that's exactly kind of what I've been expecting is like, well, we probably could get like a back test on this range here. And I know I'm just redrawing it, but it's very difficult for me to argue that this is going to be an LPS. Other people have done it. They've come on and said, I don't think it's ever going to go below 3 again. Well, that's already happened. It's already come below 3 again, but I digress. I think the argument there is really about the gap. And they're saying, well, if the gap, I'm giving people the benefit of the doubt, saying they're really arguing about the gap, not about the literal number 3. That's basically an LPS level, and that this is the support level right here that we built out on at $3 is not going to go back below it. And that's an LPS. It's exactly what it sounds like. It doesn't have a new low. Last point of support, it's strong. A lot of people buy in here. I'm not seeing that with volume. So unless you're seeing something I'm not, to me, it doesn't look like even a high volume sell-off, frankly. On the grand scheme of things, it looks like really low volume coming down here. So we'd have to see that volume come in. We'd have to see that quote-unquote smart money come in. And then, yeah, this could definitely be an LPS and just take off, in which case 3 is your floor, and this is something else. I don't know what this is. But in all likelihood, that's not the case. In most of the time, you're in this situation, you're really going back down to, again, get back to this creek level. So this creek level is of utmost importance because it was established on the way down as like that's where resistance is. You need to confirm that as support. And if you didn't confirm it as support on the way up, which I don't know how you could argue that we did, we just basically leapt over it in 2 days. You always come back down. I mean, that's just the way that AMC is. We just always do. And so it's horrible. It's frustrating. If this happened in 2020, yeah, it did. So again, fractals be fractals. by themselves, they don't really tell you anything, in my opinion. They can be very useful to learning things and to like finding patterns. And obviously, like, this is based on watching a number of bars patterns and watching the price move. It's all kind of the same thing. I mean, if you're doing patterns, you're doing patterns. I think it's okay to use a fractal. But the idea of a fractal, for me, it means more than that. It's iterative. It is within itself showing you a behavior chain of analysis. It's really trying to get to the underlying, you can call it an algorithm if you want to call it an algorithm, but it's really a composite operator. It's a bunch of different institutions trading a stock. And this is really showing you like the footprints of like how they're moving, how they're maneuvering, what are they going for with liquidity, what are they trying to get back to. All of that stuff, if you're using fractals to inform you of that, is good. If it's just a bars pattern, that's just kind of empty. It's a shell of a thing. And by the way, you might think that I invented that idea, but I did not. One of the very first videos I ever did, a guy came on. I'm talking about one of the very first. This was like in November of 2021 or something like that. One of the very first videos I ever did, a guy came on and he said fractals are pointless without all this other stuff. And he was talking about volume and all this other things. He said basically they're just empty shells or something like that, is what he said. And I told him at the time that I disagreed. And I have changed my mind that he was correct, because what he was trying to tell me was true, that the fractal themselves do not have to result in any particular yield. Like, just because ABC happened before doesn't mean ABG couldn't happen next time. It really is determined based on demand, supply, what the levels are looking like, where are those creeks at, where is the resistance at, how is the fractal actually navigating that range space. So I'm talking a lot about fractals, but I'm trying to give you guys a better understanding of like why this is what it is. And I think that when you combine it with levels, it does make a lot more sense, because when you just look at it as a bars pattern or something, it's like just a bunch of ups and downs. When you look at it with like levels and creeks, this totally makes more sense. And it also makes perfect sense as to why later then this breakdown here that happens on the cat ear is like, why did we go up to where we went up to? Well, guess what? It's there. It's in the fractal, quote unquote, right? But it's in the wave pattern because that's the bullish trajectory on this wave. And then when you look at it that way, this isn't like very complex at all. It's really just a turn of a stock. Like, it's Wyckoff, it's all those things. It's Elliott wave, whatever you want it to be. It's resistance, support, resistance, like super straightforward. And then the places in the middle can inform you about directional input and where there could be resulting action in the future if it manages to break the creeks. And that's the big thing that I think we need to keep our focus on, is like, yeah, like all of this stuff might indicate that there could be a squeeze coming. I would agree within the next, I've been talking about it a lot, and I've been saying like, I'm pretty sure it's going to be around summer a while back, that it probably be around summer. I know that it's hard sometimes to see the forest through the trees kind of thing when you come on here and you listen to me talk about AMC, because it seems like sometimes I'm on here talking about random stuff and it's all over the place. But I know that the majority of the time I've talked about this being a likely summer event because of the timing of this bottom, the way in which the bigger master wave, like the huge one, the huge version of this right here, this looks like AMC's all-time chart. The huge version of this has a wave built into it, and the timing of it's kind of slow, and that's where that February 2026 thing happened. And people keep asking about that. I get DMs all the time on Discord. Is this still happening? Is this still happening? And I'm like, yeah, I'm pretty sure, but the idea of it is like way out there. To say 6 months or plus in advance that you think something's going to happen is a huge undertaking. And it is how the market in some ways should be traded, because if you're long, that literally means you're trading like for the long haul. You think it's going to go up in the future, you're kind of making those bets as opposed to like a swing trader who's just technically just trading ups and downs or whatever. A long would be looking at it saying, I think this is where it's going to go, and there's a lot of fundamental support that has to come for that to be a reality. But I can't tell you how many times I've had people DM me, especially in the last few weeks, maybe because the market's red, panicking about stuff. I'm like, I don't know, man. The plan was always kind of to come down. I do expect there's probably going to be some shenanigans right here, but I still think that unless it's an LPS, which is a possibility, but I don't think it's the most likely thing. Unless it's an LPS and it just takes off, I think what's most likely is that it's actually going to go pop maybe a little bit, and then we're going to get a big drop, right? And then we're going to see it hit those lows and then react in the summer. Now, that doesn't mean it's going to go up all the way in the summer. It's very possible that that summertime move doesn't go very far at all. And I've talked about 19. I think it's very likely going to be in this pocket here, in the summer. But we're not there yet. It's a very difficult thing to have somebody ask you, do you think it's going to be at $20 or $19 or $13 or whatever? I'm like, yeah, I do, but there's no way you can hold me accountable until it does or doesn't happen at that around that time. And even then, it's like I can't predict that it's absolutely 100% going to go from there up. Really just basing it on huge macro setups. And that's it. And that's not any more complex or different than what I'm doing here. It's just on a bigger scale. On the bigger scale, the wave doesn't need to complete till near February of next year, which is a year away. But do I think it's going to get there all at once? Probably not. Do I think it's going to take a lot of time to get there? Probably. And so it should start sooner than that, but then it's not going to finish necessarily right at that point either. We're talking about moving up into that direction towards that time. We also have the problem of the chart shift, which is a real problem. If we see something that doesn't look quite right on this first run and it only goes to like 9 or 10s or something, and we're just kind of sitting there, I'm gonna be honest. Like, I may not be as bullish as we were hoping. We may not get past 30 to 40, and if that happens, that's what happens. How could that be possible? It's not complicated. It's very simple, actually. And it has everything to do with the fact that when the reverse split happened, the charts moved. It's that simple. And it's really a way of whether you do it, I guess, informing the future versus informing the past. Like, if the target was originally the top, then where would the target be now? If the target was not originally the top, then where would it be now? If the target really shifted down, do you ever have to really go above this particular marker? In which case, why not just hit the $46 level? Yeah, all that stuff's true. It's all very possible. I don't know. Not helpful, but the more I've looked at that shift chart, the more I worry about the fact that we may not be destined to get above like 40s again, I think the big picture also is disturbing, because even if we were to go up on AMC all the way to like 60 to $80, that's still below the original opening values of the chart. Like, it sounds like a lot when you're just verbally saying, I think it's going to go from $3 to $80. I'm like, yeah, it's a big move. Percentage-wise, it's a lot. But if you look at where the original values are, this is not a lot. Like, I don't know exactly where this is, but this would be like around $12 or something. I don't know where it was. $12, $14 or something at that time. Because wasn't this like in the 9s over here somewhere? I think I originally bought in like April or something. I had a really good buy-in. But like that, I think was in the 9s or something like that back then. So this is not, it's not the same chart, It's like, yeah, that sounds like a lot. Percentage-wise, it's a lot. I hope I catch it, but the overall picture here is still kind of bleak, even in the midst of that move. It's really just returning back to early kind of middle values. And it makes sense. I mean, on a wave, you would expect it to maybe return back to the center again before deciding what to do. It's really common in the market to have that kind of motion and try to get back. What's for lunch? I've already eaten lunch. I got on late today. So it looks like IWM closed pretty low, down 1.5%. AMC closed at $3.01. We got GME at 24.20. I don't think that's that bad. I mean, it could have been worse for GME. It still, to me, looks like an iteration that's starting to curve up, and it failed to make a lower low. Unless I'm just wrong and it's too early, and maybe I'm mistiming it. This to me looks like a shrinking mode, and I can see this as a breakout here pretty easily. So I think what we're missing is maybe we'll see some kind of reaction tomorrow that I can't guarantee it, because if I'm wrong, then it ends up being crappy. But maybe we'll see some kind of it could be really crappy if I'm wrong, because if the timing's wrong on that and I'm off, it probably just dumps really far. But if I'm right and it is a shrinking here, then it should kind of build back out sideways. I don't think it'd be a breakout necessarily. I have it kind of breaking out. But I think it probably ends up needing to get back and hold above 24.50. So if we push up tomorrow and make a new high here and then come back down to 24.50, I think GME is in a really strong spot. I think for AMC, I don't know. I'm less inclined to care if AMC drops. I don't know why. Maybe because we still didn't gap fill. So part of me is like, it doesn't really matter that much at this point if we make another low, because it wouldn't really affect the grand scheme of things. It's not any different than what we would have expected, is what I'm trying to say. The compression here is very real. Did I get rid of that line for some reason? I think I did. I still think this is like the dominant trend right there. I would say to have something similar happen, you'd need to see AMC kind of break out, make a new high here. Doesn't have to go higher than 316 necessarily, because we only came up to 313. If it can come up above and then even here just kind of chop down, I don't know if we're going to get it. It's not a lot of time. Yeah, even if we make a new high and we end the day on a slightly new higher low, I'd be happy with that. I don't think they'd be easy to tell. It doesn't look like a breakout would be in store. The more bullish, I guess, option would be to push all the way up to 315 and just hold and not move, but get there early in the day and not move. And I'm skeptical of that. Am I skeptical of that? Oh, okay. I think I know why. Visually, I'm thinking about it in my head. I'm like, usually there's a method to the madness of iterative breakouts. So if it does break out, it tends to be kind of the same trick twice. So you see the same motion here. So this is where the rally happened and failed. You see that? And then it dumps back down and it comes low. And then you see it breaches up to the highs and then compresses. And it's actually doing it again. I think this is a really powerful shrinking motion. So this is actually a break up. You see that? You guys nope. This is a 3-minute chart. On this iteration, it looks... Or is that the same motion as this guy? Bah, humbug. I bet it's the same motion as that guy. So we might get one more. That would be so dumb looking. But we might get one more. Yeah, we may. We may get one more. Sorry, I'm saying the same thing over and over, but I don't know, because this came back. It didn't actually break down here. This went all the way below the last iteration by quite a lot. 50-50 down. This one got stuck and hung up like here. It would be like if instead of doing this, I'm going to use a bars pattern. It would be like if instead of doing this, it stopped here instead. That's like the comparison. I don't know. That would be really different, right? That seems like a change of character to me. Because it didn't push down and make a lower low. Nevertheless, we don't know what's going to happen on the outside here. There's so many things that could happen. My point was to say that usually once it iterates out, you get this kind of repetition of form. So I know it's going to seem really dumb to do this, but I'm going to do it anyways. I was just talking about don't do this, copy paste stuff with bars, fractals stuff, but can't do the same thing though, Booksy, because that is the iteration. Whatever, I have to do it. I don't have any other way to do this. This is what you would maybe expect for Monday, which is confusing, but it is right. So basically, I think if this were to work out, you would have a chop here, because all this little gobbledygook that you see would be the final iteration on that one. This guy right here, is it tried to get below right there. See that? That little gobbledygook seems ridiculous. If I'm wrong, then I'm wrong, but I'm going to do it anyways. So this is a, you guys are like, well, that's nothing new. No, but it's it's complicated because I can't really tell. When it gets this small, a lot of times I want to assume that this was the last iteration. And then it may not be, it may still need to drop again. Like this drop may not have happened. And that's tricky, It may be that this is pressing early and it is changing character, but it's really because this is just pressing more outward than this one did. Because this was like an LSPY of sorts. Like it comes down and it tries to kind of hold on to the level. The reason this is different is because it held above the level. You see that? So like I'm already trying my best to kind of gymnastic brain this, because I'm like, well, technically this held above and this went below, so it looks like a change. It's not impossible that it didn't change and this is actually like pulling the other way. And that's when we're going to get the drop to the gap fill. We'll leave that door open, I suppose. But I'm going to suggest that it probably did change. So this would be the iterative change that happened would be the build out to the edge of the creek here. Notice that we haven't built out to the edge of this creek. So you see how like one of them did and one of them did not? This one actually built out to its own edge. This one has yet to build out to its own edge, which tells me that this could be an outworking iteration as opposed to the part of the last one. It's actually building out the second M. So the compressions we talk about, every compression has a reaction. So like one side has another side. It doesn't mirror, that's not quite right, but you definitely would suggest that on like an RSI or something. We were talking about the RSI. Ooh, like a bar coding. Goodness gracious. I don't know, anybody can trade this on the 1 minute is beyond me on AMC. But there is an idea here of like compression that was happening on a bigger scale. When we looked at it, it was really easy to see. I think on like the 15 maybe. Maybe it was something else. I thought that was on the 15. This is the widening. Yeah, it's trying to break out. I guess all I gotta say. I can see it, but it may be missing like that last, I can't tell. It might be missing like that last dive and like one more iteration down low. Would not surprise me to see it kind of move again one more time into maybe into Monday. It's a kind of a crapshoot. Yeah, I don't know. On the 15-minute, it seems more reasonable that it would dive again. On this one, you can see what I mean. Like 1, 2, 3, and this one's like turning up. It's already jumping back above like really quickly. This one went low. This one did not go low. So it's just a mixed bag. I've got no real problems either way, in my opinion. I think if it goes down, it's fine. It'll be all right because it just means that I was off by one. But if I'm not off, then the expectation would be that you'd see that compression against this guy, this wall here tomorrow. And it should be proportional, so about the same in terms of scale, and that seems about right, scale-wise. I'm not great with everything, but I'm pretty good at proportions. Because like this proportionally would be... Actually, it already kind of looks like the right size. No, because you'd have to expand it out. All right, so one of two things tomorrow. Why I'm making it so complicated. One is that it drops and we get like a compression down low, which is fine. It would be not this messy. It'd probably be like this, where you'd hit a low and then you get another tiny low, and then I'm thinking at that point it's going to explode. I don't know if it's going to go below the gap, but I think if it gets that low, it's going to be really, really, really tight compression on a Friday. And I think we're going to see explosions on Monday, one way or the other. And then if it goes the other way, it's kind of the same thing, but it would be to the upside. And I don't imagine it's necessarily going to break out, but it should get kind of close to it. And this would be like the first iteration coming to fruition. And then Monday, it doesn't seem like it, but if we're talking about iterations, it's not copy-paste, right? Remember, iterations are actually within themselves, which means that this is part of a larger motion. So this iteration right here of pushing up and then getting that little head fake is actually the same as this pushing up and getting that little head fake. So it's actually kind of confusing because you might think, again, that you're doing like a sequential train ride or something like that. Like each train car is there. That's not really right. It's like a train within a train within a train. So this motion right here is actually the same. Probably would have been an easier way to explain that. Just to say that, yeah, so this motion right here, this like four-top motion right there, is likely the same as this four-top motion here. And then the resulting action down here of the bigger resulting action here is the same as the resulting action here of the smaller resulting action here, kind of thing. That's the idea of the compressions anyways, which is why it gets kind of obnoxious. It's like a infinite staircase almost, like you're kind of shrinking into a point. So maybe a better way to describe it would be to say, like, if this is the whole, right, then as you compress, you should see that play out, on like an individual scale, right, at each level. And I think it is. Like, there it is, right there. So you see that, like, that motion in and of itself should be repeated essentially indefinitely. And then weirdly, like, it would be like that. So that motion there. And then as you shrunk it down, you get the same exact thing here. That's the idea of a shrinking iteration at play. It totally is one. I'm like almost 100% positive it is one. I'm just not 100% positive when it ends or when whether the reaction is favorable is question mark. This looks positive to me because it did make a higher low micro, but it looks positive. If it does the same thing tomorrow, then the last result would be, really, this is already like a macro version. It's already at that point, but I suppose you'd have to look at that big picture as completed. I think we'd at least get back to here. I think we're right. That should be the first move, which is at the edge. IWM, man, disappointed, but I did buy longer positions. I traded out twice today, the ups and downs, because when it hit the low, I was like, it's going to come back to 207. So I did trade that. I didn't trade the down, but I figured if it did come down again, whatever, you know. The reason that I was so like bothered by it, I guess, this morning was when I went back and looked, this looked fine. This actually hit our target like right on the money. It was really great. There really wasn't anything wrong with the original setup that we had yesterday. If you were following, the only thing that was kind of crappy about it was here when it came low, because it came just extra low. And again, I think that probably was an SOW, you know, like this idea of like weaknesses being kind of born into it, that we were going to come back here later. This is where I'm getting annoyed, because I'm like, I think this is just iterating like the same crap over and over again. And this is what happened here, and it pumped up and then came down and pumped up. And look at that. It's the same exact thing. Like the patterns here are really kind of obnoxious, right? Like this motion right into the kind of the chop and like the bounce out and the cat ears right back down to this motion. That's the same exact thing that you just saw happen like today. It's another compressive motion, you know. Oh, there's the drop, back up. It looks exactly the same to me. I'm not even sure where we are yet. Like I can't tell you this is this or this is that, but it looks identical to me. I mean, I might expect like one more push up here just to kind of like finish that one, but I'm like, this is the same stupid motion. And what really got me irritated about it was looking at the RSI. I was like, well, it's right there. I mean, it's the same motion over and over. But what was really irritating was watching the extended hours. Talk about like, talk about fractal nonsense here. You can see it like visually in the extended hours in the way that the pump and dump happened. It's like repetitions within repetitions. Like this motion into this chop down is essentially like an identical as like this motion into this chop down. I mean, it's the same exact motion, you know. So we're really seeing like the same things just repeating over and over and over again until they don't. And I really wish it wasn't the case, but it is what it is. You know, I don't know if it's going to terminate. That's what I was looking at this morning. Like, what the heck is going on? Like, that is so blatantly the same. It almost hurts my brain. And it's frustrating because you want to see it change and you want to see it pick a direction, but it just didn't. Great for swing trading, bad for everything else. Great for swing trading if you can track it and you can kind of follow along. Bad for everything else. I suppose if I have one concern about all of this, it's that, again, I don't necessarily think that this is going to end super positively and I'm kind of concerned that there's going to still be like one big massive dump at some point in the future. Because even though this shrinking is, in my opinion, definitely there, I can see it like here and then again, it's doing it again here. It's the same motion. Ear one, ear two. This is ear one, ear two, ear one, ear two, ear one, ear two kind of thing over and over and over again. I'm most concerned that we're going to see like a fake out kind of pump that then results in like a massive dump. And we don't really know, because even though you would say like, well, shrinking iteration is positive, right? Yeah, it is. If it's going down, usually is. Even though we would say like that's mostly positive, and I think that clearly like it's way oversold on a lot of levels. There seems to be a need for a pump. What we don't necessarily know yet is if we're just shrinking, we don't know what the result is. We're just seeing cause. We need to see effect. Effect might not be what you think it is, right? And this is where things in the market can get kind of bizarre and bonkers. Like we've seen effects that are just clearly like one direction. Like, oh, that's the effect. Jumped over, made a ground, goes again. Jumps over, makes a ground, goes again. Jumps over, so on and so forth, right? Great. Yeah, that's possibly one effect. But another effect might be something more ridiculous. Like it could be a jump over that then flushes down, and you could end up with some kind of crazy like widening here that nobody's really expecting, you know. And I mean, it could be really bonkers. And before you say like, well, that seems a little out there, it's happened where that's where you've gotten some kind of crazy like whip around type stuff in the market, and I've seen it like work out from that particular setup where it's like, yeah, it's clearly doing this, but then when it finishes, the result is not what you expect. We just saw that on AMC for whatever it's worth. So I am a bit concerned that the result might be less than ideal. Like we might get this kind of breakout mode here that takes some serious liberties, if you will. And we could see some really nasty like deep retracement kind of deals until, you know, it kind of finishes. I mean, it could be almost like that. It wouldn't surprise me at all. And I think that's kind of not a great place to be. I wish it was simpler because it would be nice. But if this happens, I guess we better be ready to swing trade it. I suppose that's the moral of that story. Because it could be like that violent, you know, especially with everything going on in the world. It'd be like news story after news story after news story. Hold on to your butts. That's what I want to say. That's why I titled it Rodeo today. So, all right, I'm pretty crapped out. I went a little long. I feel bad about today. I feel like I didn't do a good job, but I'm going to do better tomorrow, hopefully. And we are very close. I feel like I was all over the place today. But maybe that's, or I think I was all over the place today. Maybe that's a truth that I just can't avoid right now. So I'm going to work it out as best I can tomorrow, and yeah, maybe the reason I think that in the back of my head is really because at the end of the day, like, there's a lot of uncertainty. So when you get down to it, it's easy when I can come on and say, oh, I think it's going to move up from here, or it's going to move down from here. It's harder when you're like, you know, there's precedence right now to make some pretty big moves, but I also think that we're not quite down enough. It's complicated. That would actually support this idea that this is a wave 1 and that we're missing a 2 here that does push up, but then we have a big dump and then we go into 3. Or I'm talking in my head about like 1, 2, 3, 4, and then this would be like a 3 for another 1, 2, 3, 4. So confusing. I'm not talking about Elliott waves. Yeah, so this one actually started there. Then why is it so low? Maybe the intention, sorry, and I'm just keep going, but maybe the intention here is not to actually, well, I say that, but This is a change of character if that's the case. If I pair them together and this is like a middle, it's pretty hard to deny that it's different, because this actually immediately made a new low, and this just kind of builds right out. It doesn't make an immediately new low, as far as I can tell. Like this drops down and then goes up for that year. All this chop is there, it's whatever, but I know this is right. I know this is an ear by itself. Why is this one so ugly? I don't know. That's bearish kind of looking. No, it's bullish, a hidden bullish divergence. Well, if you get too wrapped up in shrinking iterative motion, then you'd have to suggest that this motion is kind of like what we were talking about AMC. That motion is like a shrinking of the whole, and you're seeing it compress into a bottom. And that it's not part of like a greater outworking. But that's not quite right, because meaning like it's a very narrow way to look at it. Like as if it doesn't fit into the hole or something. It does fit into the hole. Because like a wave, when it comes down, there's two ways to look at shrinking. There's more than two, but any kind of like input output would be shrinking. So like in, you would shrink, out, you would potentially expand, and then shrink, and then expand. Yeah, that's right, because we see that there's an expansion. Sometimes it's inverted though. That's what's making me kind of throw me off, because we need an expansion and then a shrinking. And then this is always like the same, because you have an expansion up and then a shrinking down. So the model is always like a repetitive cycle. The reason I'm throwing that in there is because it could be that this is indeed a shrinking, but you don't have to have the end result be the end, because technically the end result could just be like a shrinking of a wave that's, and I don't think this actually necessarily makes new lows. Probably doesn't if it does drop. It could be even more compressed, like a more compressed version of itself here. If it does it again, trying to make new lows, and then it finally breaks out. And that almost makes more sense, because you would expect there to be a change in direction and character before the end, which is sort of what we see on a lot of these. When they change direction, there's a micro kind of a compression, like things are trading, but they're running out of room and they go the other way. And it's because they're no longer pushing down, as it were. But I guess what I'm trying to avoid is is a trap that like it's definitely the end and it's going to come all the way back up and just keep going up. It's not impossible. But technically, just because it's shrinking here does not mean It definitely doesn't mean that the outworking couldn't be long and boring. I think where I'm getting lost on all this is the like I don't have a great map of these iterative motions. Like I think that's it. 1, 2, 3, 4. And then 5 would not be this top. It would actually be so right side, right side, right side. So it'd be whatever the right side is here. It might be this whole thing there. Yeah, it might be. Yeah, I think so, because this is the right side, and then this is the build out on the right side. This is the build out on the right side. I was talking about this earlier. I thought that this looked more like the LPS, or LSPY, the chop. Why is it rising and falling? That is the level, though, that we're compressing down against. Here, which are coming off of that 232. Yeah, that's the level. And then even bigger than that. Because this should all be part of the same thing anyways. I'm just drawing it like a train car, but it really all connects on this side. This all would be part of potentially that right side. Starting back here. It's really interesting. Because the reality is that if you look at it like that and you were to just kind of draw these all like terminating at the same point, even though there's like a movement here down, the reality is kind of more complex because there's actually a movement back to the beginning of where the iterations even started, which is here. And it definitely started there on the creek jump. When you jump the creek and then it pushes up again. So this is like that wind up and unwinding that we were talking about earlier. Yep, and this is probably why the RSI was already on its way out. Because the wind up and unwinding were already like happening. Like the unwinding was already happening here. It just doesn't look like it. It doesn't look like it at all because it looks like that's not, I mean, it's obviously not the peak. It didn't hit the highs. But that's it. I mean, you see it on the RSI pretty easily. I think we're right. This is where it jumps over. So the rest of this is like all the right side. What's maybe where I'm getting a little lost is that it doesn't look like it, but it definitely is. That's the wave. This is just like an early attempt to jump the wave that kind of fails. And then it builds out and it does jump. And that's where we saw like the build out into the breakout. And that's great. The rest of this is just kind of a mess of almost like a habit. Like it has to do these kinds of things with the push-ups. one of the bigger questions is going to be what prevents it from being just like what happened back here when you got like an early leap and then there's like an extension. I mean, it's kind of different, but I don't even know where you'd place that. I guess it'd be like here. You got an early leap. Yeah, sort of similar. Like, what's to prevent it from doing something really pretty much like the exact same thing? I'm not sure there's a good answer. There's some key differences, but there's also a lot of similarity there. This would have been the jump of the main creek here, and then this is like the resulting action down. It kind of ignores the... Yeah, we're just kind of looking at it. I mean, it's all through the same lens in some ways. It really doesn't make a huge difference if you think it is or it isn't, because like at the end of the day, it wouldn't matter if it holds the levels, it holds the levels. If it doesn't, it doesn't. But there is a lot of similarity. One of the key differences is that these don't go significantly low. They just go back to here. Whereas like this would have had early signs of weakness that would have been like really low. And they were like down there. And that is what happened. And the ones we have now are not nearly, in my opinion, I don't think you could make an argument that they are, because they're kind of upward, if anything. This built out with a lot more strength, at least coming out of the gate. So the wave here is extremely bearish in a lot of ways. That down and up motion. And the wave here is very similar looking, but there's really no way to draw creeks here that are extremely bearish. Like these only come down to like the 190s. And that angle is very, very different. Yeah, there's no way. I mean, even if you were like, oh, it's the exact same because of the fractal or something, it's just not. Also to note is this is an upthrust that has the highest volume and it has the highest RSI. The early RSI that was hit here on the advancement doesn't actually breach all-time highs. It's not advancing, and it's in this final one that advances. This did not breach all-time highs, but it did advance. I think the pullback is the place that I got a little thrown off because it's come back so far, but it ultimately like does the same thing after, but it continues to advance, but this doesn't ultimately make a new high that's got higher RSI, and it's weak volume-wise by comparison. The sell-off after is good. I mean, it's a heavy volume sell-off, but I don't know. It's kind of mixed feelings about that. I guess what I'm trying to say is it is have some similarity, but then there's enough difference there that I don't think I might have to take a break. $43.42 is the famous 801 level. This is kind of what we're doing. Actually, it looks pretty similar, doesn't it? This motion right here, I'm not saying it's identical, but it's very similar. Yeah, and there's a compression too. So it's like going up and then like doing this like compression business. And you had this like downward push and you were like, why are you not breaking out? And it was like holding up. It was needing that relief, but it doesn't ever come back up above, not significantly anyways, back to the floor that it dropped from back here. And yeah, that's our 214 level, which is like the halfway point. So I think we're on the right track. I think we're right. I don't know. Of course I think we're right, but I genuinely think we're on the right track though. It's a really small version of that. That 4 hour looks interesting. Like it's getting ready to try to cross up. Definitely can see that compression down. I could definitely see it doing some kind of weird dump first. That's why I'm trying to like get across earlier. Was like, I know there's like very, very few of you on here now, and I got to get off in a minute, but I was trying to get across it. Like I could definitely see it taking a nosedive just to shake people out like one more time. But I'm curious if it did that, if we would ever need to come back. And we may not. I think if IWM does like a nosedive for some reason, and like gets a really heavy volume sell-off to like 190s or something, I don't think it needs to come back again. I think it would just take off and go. I think AMC is the one that I'm more like, oh, well, that one may have some kind of an eerie similarity where it hits like a gap fill and then goes up, but it may get stuck. And then if IWM starts rebounding, it's a very different story, I think, than, yes, I've been kind of talking myself into this area because I thought 220s was likely, but then I'm like, maybe it doesn't ever come back that high right now. I've been talking myself into this area over here. I think that's right. I think it's just going to come back test because it has to. It's to some degree. I don't know if this is going to be a very fast fall if that happens. I think we may end up with a really slow churning bump here that comes up and then chops for a while before it drops. We may end up doing some more distribution up here and then come back down later. That's what I'm thinking, like, so the iteration would be finished, but it would be like for this middle. And then the build out is really where you see, yeah, maybe, I don't know. I'm kind of just spitballing anyways. All right, but that would be different. That would be like the build out here would be resulting actions, and we can go on and on and on and on and on. All right, I'm done. You guys have a good day. I'll talk to you later.